Hello. All right, you guys ready? That's kind of weak. Come on, are you guys ready? Yeah. All right, well, that's much better. Okay, there we go. We got a long list of people today. Pretty much every single one of these people, somebody that I know very well and I think very highly of. And I genuinely just enjoy talking to them. Mike's not even going to wait for me to introduce him. He's just going to come up here. So, Mike Novogratz, let's go. All right, that's fine. You ever seen somebody bring Starbucks food to the fireside chat? All right.
I like this desk.
It's nice, right? You know why? You know why? Our team got mad at me the other day because they were like, "You're on stage," and I was still texting them to get stuff done. And I said, "Yeah, it's easy. I can just do that." People are very confused in this room. They feel like the last 10 years investing, I don't want to say it was easy, but it was definitely like everything was up and to the right. You could just make money. You could buy S&P, you could buy Bitcoin, whatever. It now feels like we are in a much more complicated, kind of macro-oriented world. You've been in the macro world for, I don't know, 30 years, 40 years?
Long time.
60 years?
A long time.
What's going on?
I had hair like you when I started.
Yeah.
Listen, it's complicated. I was sitting with two of my mentors who are 72, and and their kids, I don't know if they did it right or wrong, their kids are roughly the same age as mine. And I said, would you ever think about, giving your kids some money to manage, so they can make their own decisions with it? Like, how do you empower them? And they looked at me like, are you insane? They were like, we are entering the hardest 10 years of our careers and how to preserve and grow value. And we're at least pretty good at this. We have no idea if those kids are going to even be, an iota as good. And so, no. And I thought about that because, they're right? There's so much changing right now that it makes value and understanding where to have your capital, just to stay level, right? If you measured yourself in gold, you didn't have a good year last year unless you owned a lot of gold, right? And so, does it mean run into gold now? I don't think so. I think gold and silver, certainly silver, put in the cycle high. If you look at the silver chart and you lay it over any other bubble in history, right? The NASDAQ bubble, the MicroStrategy bubble that we had, you name the bubble, the Nikkei bubble in '89, take the silver chart, put it right over it, and tell me you want to buy silver. You might buy it tactically, because it gets oversold and it bounces. But I will bet my clothes, I'll show up on this stage naked next year if silver puts it a new high. But it was an amazing story last year. And so what I think is happening is the United States is losing its position as the reserve currency of the world. And you can see that by the amount of treasuries held by, foreign central banks, foreign countries. They're going straight down. Partly this is by design. This is administration that has told neighbors, allies, we think you've cheated us, you got a better deal. We're very belligerent in our negotiating tactics. It can be called the art of the deal, or it can be called being belligerent in your negotiating tactics. But what you saw from Mark Carney in Davos and Pierce Starmer, they're like, okay, we get it. You don't want to be our partner. We don't trust you anymore. We will partner with China. We'll diversify our assets. And so the good news for the U.S. is China is nowhere close to being the reserve currency because it's a closed current account. I was actually just in Asia, and I asked 4 different Chinese billionaires, guys who were living in Hong Kong, but mainlanders, how soon before China opens up and has a convertible currency. The most optimistic prediction was 20 years, right? They're like, no chance. There'll be so much capital flight. It's going to, what are currencies about? Currencies about trust. I trust the people in charge to be fair with my money. And so China doesn't have it. So you go, Europe. When I graduated from college in 1987, European and US GDP was roughly the same, and today the US is almost double. And so you're like, oh yeah, Europe's not this great growth story. Listen, they have a lot of good stuff happening in Europe, but it's not going to be the reserve currency. And so we're going to be in a world where we're in between, where there is no reserve currency. And so last year it was gold and silver. The year before it was Bitcoin. Got to be in Bitcoin, got to be in Bitcoin. Bitcoin went from 16, 18,000 in 2022 to 130,000. Pretty damn good way to increase wealth. But then it had its movement and it crashed for a lot of reasons we can talk about. And so you got to constantly be on the move to figure out what's working. The trades this year that are, I said made sense about a month ago and I didn't put enough on, short mega cap in the US and long the rest of the world. Look what happened just in the last week in Korea and in Japan. The European, and Asian stock markets are way outperforming the US. Well, that makes sense, flow of funds, and they've been undervalued for so long. And so I think sitting in your seats is a much harder job than it's been in the past 15 years.
When you think about the U.S. as a global reserve currency, you mentioned to me that you go around the world, you talk to these people, you ask them how wealthy they are. They always quote their wealth in dollars.
Yeah.
What happens if the U.S. isn't considered that global reserve currency, or at least people start to weaken their dependency on it, which seems to be happening? Like, what do they use?
It's interesting. I had this idea that we should create like the global wealth currency, which is really the S&P 500, but for the biggest 500 companies in the world. And it's that. As all these countries debase their own currency because of the debt problem, asset prices go up. And what we learned, and what quite frankly Kevin Warsh believes, and I think Scott Besson believes, is that roughly you can grow money supply pretty quick. Not stupidly quick, but pretty quick. You can keep rates pretty low, and inflation comes down. CPI, consumer inflation, because there's so much productivity gains. There's so many businessmen saying, I can set this thing up in Mexico and be cheaper than in New York. Or now we've got AI. AI will literally be the thing. Everyone read that article that came around in the last 2 days that should have scared us all. AI is going to crush inflation. And so what happens is you have consumer price inflation go relatively low. That drives asset prices up because you can keep rates low. And what's going to stop it at one point, and Ray Dalio has been aggressive talking about this, is a political revolution. It's Mondami squared. It's wealth taxes, but not at a state level that don't make any sense, but at a national level. It's people just saying enough. Because the criticism of the Trump economy, interesting enough, is the exact same as the criticism of the Biden economy. Right? It's not working for 60% of the people. He said, wait, but my stock market's on the high. Pam Bondi, 50,000 Dow yesterday. Come on. You guys should forgive everything else. 50,000 Dow. Well, Biden had the same thought. His stock market was the all-time high. Right? He had inflation coming down. He had inherited from a high level, coming down because of COVID. Right? He had the most job gains in the history. No president in our country ever had more job gains than Joe Biden. Right? So if you're Biden, you're arguing, I was a great steward, the same way Trump is. Well, just go walk into Queens, in not Manhattan, or into Des Moines, or all over the country, and most people say, it's harder this year to do what I did last year. You can call that inflation, whatever you want to call it. It's harder this year to have the same life I had last year. And so that's the real risk, and I don't know when that shows up.
It's not lost on me that the private sector crushed inflation, not the Fed. Right, what you're talking about here, of like the Fed was able to get it from 9 to 3, but really it is the private sector and artificial intelligence and all this stuff that seems to be really putting inflation to bed. How does that change monetary policy? Especially, if you're Warsh, you're coming in and you've got deregulation, you've got tax cuts, you've got deportations, you've got tariffs, you've got AI. I mean, this is a very complex thing to navigate.
The one thing I would say, all of us as Americans should have a huge sigh of relief and a little bit of a cheer, like raise a glass and cheer that Warsh is in the seat. Let me tell you a little bit about it. I don't know him that well, but I know him pretty well, and I know Stan Druckenmiller really well. And Kevin sat for the last 12 years as close as me and Pomp to Druckenmiller.
Is he in the league?
What?
Is he in your league? In the fantasy football league?
He's not in our league.
There's a billionaire fantasy football league. Mike's in it with a bunch of these guys, so he'll tell us about that in a second. Go ahead.
But so what about Kevin Warsh? What Kevin Warsh did and why the market reacted the way it did is he took the tail risk away from idiot policy. He's dovish. Make no bones about it. He is going to probably cut rates, at least the first time, but he thinks rates should be a lot lower because of the AI piece. But if the facts change, Kevin will change, and he's a man of integrity. Like, he's tough, and he's one of the most convincing conversationalists you'll ever sit with. The last time I was in his office, he looked good. I looked fat. I was like, hey, what do you do to stay healthy? Intermittent fasting. And I got a 1-hour lecture on intermittent fasting. This guy knew more about intermittent fasting than anyone I've ever met. And he'd been on it for 6 years. I lasted 2 days, too. Like, guys like him who have discipline end up having integrity. And so I think we're happy that Kevin's there because he took the tail risk that you're going to do something really stupid, that you're going to cut rates when you should be raising rates. He's got at least some period of time where he gets to keep POTUS happy because he's going to cut rates. And I would probably argue if he has to hike rates, he will have convinced POTUS it's the right thing to do. Like, the one thing about Trump, which is well documented, you have a lot of influence. You can help change his mind, and he's not as stubborn as he looks sometimes. And so I think Kevin will help the dollar stay important a lot longer and will be a good steward of the economy.
We're at the Bitcoin conference. Bitcoin is not, quote unquote, working. Are you selling Bitcoin? Are you buying Bitcoin? Are you worried about Bitcoin?
Well, I put on green pants today because I'm trying to give good energy to Bitcoin. I almost wore an orange jacket. Listen, Bitcoin year. And why do I think it happened? I think we crossed 100,000. We were the best performing asset over the last 5 years, 10 years, 6 years, 8 months. And it felt like we won the goddamn marathon. And we hugged. I even set a celebratory, Twitter to our entire client base. Guys, you did it. This community, I'm so proud of the community. And it's the first global brand that's ever been built by a community. It was a miraculous accomplishment. And I think that sigh of relief allowed this religious zealousness. We got to do it. We got to build. We got to relax a little bit. And you started seeing, we had a $9 billion seller. You started seeing some whales sell, not in a mass wave. I had a friend that wanted to buy a sports team, so he sold some Bitcoin to buy a sports team or to buy a boat. Or everyone took a few chips off the table. Listen, markets are about supply and demand and flow of funds. And as you had the ETFs and then the DATs coming in to buy Bitcoin, they were met with sellers. And once the buying stopped, it doesn't take a lot of buying to push it back the other direction, right? Markets find price based on the marginal buyer. And I think we put a low in at 60. I'm not 100% convinced, but I'm pretty convinced. And so, yes, I've been buying some Bitcoin recently. I'm talking to a lot of people. They're all dabbling a little bit. But a lot of the old guys don't have a lot of dry powder. And so what we need is new narrative. And it usually takes a while. Like, I can come up with some. Warsh is going to cut rates. That'll be good. Market structure, I think, is going to pass, believe it or not. Not positive, but I think so. I literally got a call from Chuck Schumer 3 nights ago. He's like, damn it, we're going to get this thing passed. I was like, okay, boss, keep on it. I'm talking about the left and the right. What's crazy about market structure, and this says a lot about politics in the country right now, both the left and the right want to pass it for different reasons. The right needs it because this is kind of Trump's signature thing. I'm the crypto president. How can I own the House and the Senate and not get a goddamn crypto bill passed? And so there's a real urgency for the right to pass this bill. The left realized, yeah, we should have listened to the few people who kept telling us there are more crypto owners than dog owners in America, and crypto's pretty popular, especially on young voters. And so why are we making what should be a bipartisan technology political? And so the core centrist of the Democratic Party was like, let's pass this thing and get it off the stage as a political issue. So the $190 million Fairshake has raised doesn't go attack them in all their elections again. Like, every Democrat believes that Bernie Moreno won his election over a pretty popular senator in Ohio because of Fairshake. Right or wrong, that's what they believe. And so both the Democrats and Republicans wanted to pass. The bills are this close at this point. There's one big outstanding. Should stablecoins be able to give rewards? They can't even give interest, but give rewards that kind of mimic interest or not. And the banks are like, absolutely not. And Brian Armstrong is like, absolutely yes. So intellectually, Brian's 100% right. The real innovation is stablecoins that pay interest. That's an innovative product. It's great for the consumer. It hurts banks. What is driving me crazy, and I've been privately loud about this, but not publicly, is the senators are like, you guys have to figure it out. So they keep putting the banks and the crypto execs in an office saying, you guys come up with a compromise. I was like, guys, isn't your job to figure out what's best for the country and set the rules? And you're going to piss somebody off? Okay. Like that's how progress happens. Because of so much money in politics, both Republican senators and Democratic senators are scared to piss anyone off. And so we're in this weird standoff between Brian and, listen, to be fair, the other, Jeremy and Chad Pascarilla at Paxos, the guy, they're backing Brian. And Brian's right intellectually. Period. I hope he wins. I don't think he will. And so we'll see, where the compromise. So that's the one thing that could hold this thing up. I don't think it will be held up. I think it'll pass. And maybe if that passes, that gets us a little more narrative, right? Wall Street wants to participate, not because of Bitcoin. They understand we're going to move from a world of accounts to wallets, right? Paul Atkins said, I want everything on chain. And you look at how fast some of these on-chain ecosystems grow. And so the idea of tokenizing Galaxy stock or SpaceX shares, you're not going to sell them to the same people that are buying them already in the US. You're going to sell them all around the world to the 5 billion people that don't have great financial services in Cambodia, in Benin, in Paraguay, in Uruguay. Like, that's where crypto really matters. The same people who use stablecoins. You're not going to use stablecoins. You got your little phone, boom, it works perfectly. We have amazing payment systems in America, and we have amazing financial services offered. And so the crypto revolution has always been about serving the underserved. And why it's so important for America is it is an amazing platform for us to tell our stories, for our champion brands, who everyone wants around the world, to raise capital, to have investors in. And it's an amazing chance for those people to invest in Google. Like, forget Bitcoin, forget anything. Like, Google's been a pretty goddamn investment since everyone wrote off the new CEO, right? And so most people in the world don't have a chance to invest in those things. And so why market structure is important is it brings Wall Street in. Wall Street is here to sell. Wall Street is one of the great selling machines ever built. They sell mortgages, they sell equities, they sell private equity, they sell stories. People on Wall Street get paid to sell, not to buy. Wall Street's going to sell crypto. And that crypto is going to run on the Ethereum blockchain or the Solana blockchain. That story, once you have a wallet, you got to have some Bitcoin, right? And so my hope is the bell goes down, there's an acceleration of TradeFi into our space that legitimizes it more, right? I always said nobody did more for Bitcoin to legitimize it than Larry Fink. So now we need a Larry Fink in each of these organizations. And all of a sudden, the 2% allocation of Bitcoin just becomes, of course.
You guys now are a crypto company and an AI company?
My soul is in crypto, but my wallet is in AI these days.
I read a Forbes article that says you have $20 billion in AI.
I wish. Don't believe everything you read. We have 1.63 gigawatts of power that we own.
At Galaxy.
At Galaxy. And right now, power is the scarce commodity. And so we've already leased out 800 to CoreWeave, and they sublease it out to tenants. We're in the process of, now entertaining Quarters, right? You guys know who they are. It's Microsoft, NVIDIA, Amazon, Google. They're all racing to get power. And it's really power 2030, 2029, 2028, 2027, which we have. And so we have a great asset, which we are hoping to maximize the return on. That's a big business. Who knows what it's worth? I think it's worth a lot. Morgan Stanley said in their research report, said our crypto assets are worth double what our data center assets are worth double what our stock price is trading at. We still have a great crypto business. Our crypto business did $500 million of revenue last year. The business itself, not the balance sheet. The balance sheet lost money because crypto was down. And so right now, it doesn't feel like we're getting a lot of value for, A plus B is equal less than C. That's not always the case. And so we're doing what you're supposed to do. We're building each business with, heads down, a lot of hard work, grinding away. I haven't at all given up on Bitcoin. Like there's 300 million people that own some Bitcoin. They're not going to say, oh, that was a mistake, right? They're going to dig in. And we're going to have a seller's exhaustion, which I think we did.
People want me to ask the hard questions. Are you going to break up Galaxy into an AI and a crypto business?
I said this publicly and I'll say it again. We constantly we look at what makes sense and we'll make the right decision. It's not as easy as just snapping your fingers and breaking things up. And it's like people say, oh, you should break it up today because you're not getting value. Like I'm looking 2 years ahead and saying, okay, what's the capital structure look like? And there's one argument that in 2 years, we're going to have $1 billion of free cash flow coming into the company just from the data center business. And that gives you a real advantage of like trying to win in crypto. But we're going to take that, quarter by quarter, we think about it. And one transaction internally or externally can change a lot of the way you think about it. And so we'll see.
Tokenization. You guys have announced that you may tokenize Galaxy stock or are thinking.
We did tokenize. We were the first SEC tokenized stock. That's the good news. The bad news, so far it trades on Superstate, which is kind of a closed garden. So it doesn't trade with a lot of volume. You have to have an appointment basically to trade it. We are working really hard with the SEC. And I would tell you the SEC really wants this to happen where we get, and that's one of the negotiations in this bill, where we get kind of sandbox authority for our token to trade on decentralized platforms. So imagine it trading on Uniswap or Hyperliquid. Like, that's awfully cool. And that is the future of DeFi. Why DeFi is going to be so powerful is you're going to trade all these assets on these exchanges around the world. Now, is that fair to the TradeFi guys that have these huge infrastructures of compliance? I'm not sure if it's fair or not fair, but that's where innovation happens. And so it's the same thing when I think about the business I feel stupid about that I kind of missed is prediction markets. Prediction markets are going to be huge. We're looking constantly to figure out our angle back into there. I mean, Shane was asking me to invest when he was a young kid, and I was like, I didn't think the regulatory hurdle would walk away. And, he's awesome, but he's a little crazy. And so I was like, yeah, we'll see. And we'll see went from 0 to 10 billion in about a week. Why? They had courage. They basically broke the law when they said, screw it, we're going to let you trade on politics. And all of a sudden people saw what attention, right? Where the world has attention, they're making markets. And they're making them really quick. I mean, 80% of their revenue now is sports betting. And so if you're FanDuel's, I can't beat them, join them or try to blow them up. And they're all doing this both, right? There's an army of lobbyists in DC right now from the casinos and from the sports books saying this is no fair, this is no fair. But the CFTC is like, we already made a ruling. We'll try to change it some. We'll see. I saw the CFTC came out recently and said, we'll see if we change it. So what I'm telling you that story because none of this is a straight line. There's punch, counterpunch, and it's going to be the same thing with DeFi. But that's where the tokenization story really works.
We got to go here, but can you tell us about the Fantasy Football League?
25 years we've been playing this Fantasy Football League. It is great spirits. And there's a replica of the Super Bowl trophy with a cricket on top. It's the hopper. And whenever you get cocky, people are like, oh, he just called the hopper. And it started because first year, me and Adam Levinson, my partner, we had amazing semifinals. It looked like we were 100% going to be in the final. And I, of course, wrote, looks like it's going to be an all-fortress final. And 2 5 standard deviation events happen in football. Joe Horn had 4 touchdowns with the Celta. You just couldn't believe, and neither of us were in the. And so one of the guys told this amazing story of, don't jinx yourself, and he called it calling the hopper. And so our trophy has a gold cricket on the top of it. And so
who else is in the group though?
Everyone. The great thing about macro investors is they learn, they listen, they share ideas. We don't see each other as competitors. Like in some ways, I don't want to use the word collaborator, it's a bad word, but we're co-competitors, right? But not like it's when you're in the credit business, you're fighting over a piece of business. There's as much dollar yen to buy. Like I can buy as much as I want, and it doesn't matter if Stan Druckenmiller or Paul Jones is buying dollar yen. And so we exchange ideas, we exchange thoughts. And so slowly but surely, I think every single one of the people in the Fantasy Football League has, Bitcoin is one of the instruments of their arsenal. And I think one of the reasons why crypto's not going away is it's now on every dashboard, right? Everyone's Bloomberg has the S&P and the Bitcoin price. It comes across CNBC tape. And so it's becoming part of institutional infrastructure in terms of weaponry, right? And so most people in this business are in it to make money. And so if they think they can make money, they're going to pour right in. Right now, most of those guys are on the sidelines.
Mike Novogratz, everybody. All right, next up we've got Lynn Alden. Hopefully one day you all will get an invite to the fantasy football. Lynn, I don't know if you were here yesterday. I apologize, everyone. It's like a long walk out here. I feel like they need entrance music. I always think of you as the rational person who uses data to understand what is happening. We have been talking for 3 days now about what is going on in the market. Maybe we can start with the macro stuff. It feels like it is very confusing. There was a lot of concern about inflation. Now there's talk of deflation. I think that a lot of people over the last 15 years, at some point it clicked. If they print money, inflation shows up. They seem to be going back to QE. They're lowering rates. Data is saying that inflation is going down, though. That shouldn't be happening. How do you just evaluate, what is the regime we're in and what's really going on?
Well, I think in recent times, the changes we're seeing with the balance sheet and rate cuts, that's not fueling inflation because it doesn't really fuel money supply growth. Even things like tariffs, they're not particularly inflationary in the broad sense because they're not impacting the money supply. They can just around the margins show up. They can obviously increase the price of one thing. They can also reduce the demand and therefore reduce the price of other things. So it just kind of shifts things around. I think right now we're in a transitional phase in macro, which is we're exiting balance sheet reduction, going toward balance sheet increases, but the numbers are not large. That this isn't COVID printing that people think of now when they think of QE. It's more of a steady state. And then we're also in this, because we're in a period of fiscal dominance, a lot of the traditional metrics just work differently now. We have these larger average fiscal deficits, which injects capital constantly into parts of the economy. So senior spending, basically anyone who's on the receiving side of the deficit. So the Defense Department, all the contractors there, the healthcare system, Social Security spending. That's where the capital is going into the economy, and of course other parts are squeezed. So we're in this like holding pattern, and as long as energy is flowing and cheap, right? So as long as oil is not a bottleneck, that keeps a lid on inflation. And so they have quite a bit of runway, I think, to go forward with probably some rate cuts. And I don't think the balance sheet expansion will be particularly inflation in the next, call it year or 2 years.
One of the things that's always interesting to me is if you look at the U.S., that is not the whole world. And so there are times where the U.S. is doing something and the rest of the world may be doing something else. Michael Howell is now starting to talk about liquidity being drained from the system. But I think that it's very interesting. You have these like deflationary forces. Now, whether we actually get deflation or what the end result is, I think it is pretty clear to people things like the deportations, artificial intelligence, robotics, tariffs even to a degree. How do you think about money printing and their relationship to a deflationary pressure, right? Because there's one argument where it's, okay, if we go print a bunch of money, then that should be devaluing the currency. That should lead to higher gold, Bitcoin, et cetera prices. If there's this deflationary component to it, though, maybe it's kind of hidden? Like they're printing money, but it's being eaten up by the deflation? Just talk a little bit about how you think through that.
Yeah, so I think inflation's a spectrum because it doesn't show up evenly, obviously. And there's a pretty simple calculation, which is you have the debasement rate, basically money supply growth, and then you have some amount of productivity growth. Right now, obviously, AI is a big factor, but over time, it's automation, it's everything, all of our technology, all of our organization. We're billions of people every day are trying to make things cheaper, essentially, and finding new ways to make things cheaper. So you have that, let's call it 7% money supply growth over the long term, and then you might have 4% productivity increases every year. So that difference, roughly speaking, that 3% in a longer term pattern is the price increases. And around the world, central banks are basically doing their best to counteract the deflation that we would get from productivity growth with that money supply increases. But there are periods of time where we don't get much more productive in a given 5-year stretch. It could be because there's energy shortages. It could be because there's war or something like that. And other times you're in that period where productivity is flowing. And then as that money supply growth happens, it doesn't show up everywhere equally because we're not 4% better at making gold this year. We're always just marginally better at making that. We're not better at making Bitcoin this year, obviously. And then you go down the stack from there. So we're not every year we're not way better at getting more oil out of the ground. We're a little better. We're not way better at making houses. We're a little better, but we are exponentially better, for example, making software. We're exponentially better over the several decades of making electronics. So when that happens, when you have that kind of longer term money supply growth, it shows up in the assets that we're not getting better at making. Same thing with the best stocks in the world. We're not getting better at making NVIDIA stock, for example. And that's where all that debasement capital shows up. And then the long tail of things that we're way more abundant in, they get cheaper and then they weigh down the CPI basket. And that's what allows the central bank to be pretty dovish.
For a decade, Bitcoiners had a blast mocking the gold holders, saying things like Bitcoin is gold but works, or Bitcoin is gold with wings. I think I said once on television. We've been eating crow for the last 12 months. The gold bugs are now mocking the Bitcoiners, saying, "Hey, why is that thing not working?" What is the relationship between these two assets, and why do you think gold's been working so well and Bitcoin hasn't?
Well, the cool thing about assets is you can own both. I think there's been an unnecessary animosity between Bitcoin proponents and gold proponents. I mean, there are plenty of us on the macro side that own both. I think a lot of things, it's always surprising how things can happen all at once. So I've been in the gold bull camp, but for example, if you would have asked me a year ago, would we have seen $5,000 gold by now, I would have said it wouldn't be my base case. And of course, once gold runs, you get runs in silver and platinum with a lag. I mean, I think most of the narratives we see around it are at least directionally true, which is that we are seeing countries diversify, in percentage terms, away from treasuries and toward gold. No major selling is going on, but there's the marginal interest is more in stacking tons of gold, and then you get momentum building from there. And so if you look in history, kind of the U.S. stock market had kind of 4 main bear markets against gold. Right, so when we price things in dollars, it's always tricky because dollars themselves, that we just discussed, are debasing. But when you price S&P 500 in shares of gold, I mean in ounces of gold, we've had kind of 4 major bear markets over the past, call it a little over a century. I think right now we're in the 4th one's going on. Right, so equities, although there's many good ones, they've been debased pretty heavily against the money supply. And globally speaking, there's just been an influx in demand. Lately, Bitcoin is almost perfectly correlating with the software stock indices. Everyone's pointing out that ETF, IGV, I believe it is, and it's almost a 1-to-1 correlation. It could be the algorithms doing it, but really no way around it. There's just not been a lot of retail demand for Bitcoin this cycle. It's almost all been in the corporate sector, all been in the institutional sector. To the extent there is retail demand, it's mostly been in higher net worth retail that have brokerage accounts, that they have access to the ETFs now. And so right now, there's not a lot of retail buying. The interesting thing is that as euphoric as precious metals got, the retail only really came at the tail end of it. So when Bitcoin was when gold was in a kind of a shadow bull market, maybe 18 months ago, there really wasn't much retail participation, and they only came in on the tail end. And I think Bitcoin just this cycle pretty much lacked retail.
Why do you think that is? Is it just the retail folks who were interested in Bitcoin already owned Bitcoin? Is it the kind of shiny, object syndrome, and now there's AI and prediction markets and, silver or whatever that kind of caught their attention? is the media now, because they kind of like it, less of an opponent, maybe even like that? There's not something that every single day to get excited about because the media is attacking it. What's driving the lack of retail interest?
I think part of it is the shiny object syndrome, partially for good reason. I mean, AI has obviously captured a lot of mind share. I think that's a big factor. And I think broadly speaking, the kind of the lack of the crypto cycle this time probably weighed on it. I'm on record not being. I'm pretty bearish on the broader crypto space structurally, but they tend to have a lot of capital, and so they kind of fuel some of these cycles. And they didn't really have a season at all this particular cycle. And I think if anything, they are weighing on kind of the quote unquote brand of Bitcoin. When people, when media and in general, when people talk about Bitcoin, they lump Bitcoin with crypto. So they think of meme coins, scams, the broad array of issues. They think of losing money when they think of that. And I think that's going to weigh it down probably for a period of time. There's still something like $1 trillion in crypto market cap that I think is overvalued. And I think it is kind of a gradual stagnation. It'll have cycles up and down. But that's kind of just an anchor, I think, around the real story, which is basically Bitcoin and stable coins and, a small tail of other things, tokenization in general.
Bitcoin, I think when everyone first learned about it, there was some version of electronic cash, or you go read the white paper, you get told, hey, this is going to be the new global currency. If we look over the last 5 years, probably, Bitcoin has done a great job of dominating the store of value narrative. Stablecoins have really run away with the medium of exchange. Some would say that's a good thing. You don't want to spend something that is going to be worth more in the future, and so it makes sense you would spend dollars. But that also is a diversion of interest and demand and just mental energy that Bitcoin, I think, previously had. How much of an impact of the success of stablecoins do you think is holding down Bitcoin in terms of capital flows and interest there?
I think to some extent, but I think it's inevitable. Basically, stablecoins, they attach the existing network effect of the dollar, and to way lesser extent other fiat currencies. They're almost all dollar stablecoins. And when people are using money for shorter term like working capital, volatility is something they want to avoid. And so I think basically as long as people have liabilities denominated in dollars, so whether it's debts or whether it's things that other things they owe in the future, whether their paychecks are denominated in dollars or other fiat currencies, there's going to be interest in stable coins. I think that market cap is going to keep getting higher, call it for the next 5 years, and we'll see how that goes. And also, every Bitcoin transaction is taxable, right? So I think it would go a long way to have kind of a de minimis exemption on Bitcoin capital gains to make it more flow as money. And then in addition, one of the downsides of stablecoins, of course, is that they can be frozen when they are centralized. But the vast majority of people, especially for their working capital, they don't lose sleep over that. So I do think that stablecoins are going to continue to be around for a long time. And I do think that they somewhat pressure kind of the Bitcoin narrative. But I think at the end of the day, Bitcoin has that decentralization aspect. It has that long-term capital aspect. And I think not until Bitcoin is much larger and less volatile would it really kind of catch on as something that people regularly pay with. But when you look at like say River Finance, like when they do analysis on Lightning Network and volumes, the volumes are actually pretty decent on Lightning, for example. There is volume happening. There are billions of dollars of transactions happening, just not the trillions that many people would have maybe hoped for.
If AI is successful, I think that there are a number of ramifications people are thinking through. There's the whole AI agents and agentic payments and that whole world. But also there seems to be a lot of questions about the job market. And, last night at dinner, I asked a table full of maybe 25 people, raise your hand if you think your job is going to get replaced by AI in the next 5 years. Nobody raises their hand, right? It's like, hey, they're coming for the jobs, but not for mine.
Yeah, everyone else's job.
Yeah, of course. So how do you just think about like if AI is successful, what are the things that you're paying attention to, either macro or Bitcoin related?
Well, I think it is I think the biggest factor is it is a productive force. So over the, call it 5-10 year period, as we discussed earlier, it does weigh down on aggregate inflation. Even if other things go up, for example, if the cost of power goes up or eventually we have another oil bull market and that gives us some inflationary pressure, it is a deflationary force on white collar work. If you look over the past 25 years, most of the reduction in inflation we've seen is mostly in manufacturing, electronics, textiles, things like that. And that's where the combination of offshoring and automation has weighed down basically, blue collar deflation in a sense. And what this does is it kind of puts that same sort of force we've seen over the past 25 years into white collar labor. So things, accounting can be way more efficient, and translation can be way more efficient, and editing can be way more efficient. And it kind of goes up the stack from there. And that's, in the US, it's obviously tens of millions of jobs that are impacted. I tend to be an optimist in the sense that obviously it's disruptive when it happens, but I think that people adapt. And I think that, productivity is a good thing. When they invented the tractor, it's not like, it was a apocalypse of farming jobs. It's just that every farmer got way more efficient at farming. And then some of them, obviously, as generations went by, could go into other fields. So instead of having 60% of the population work in farming to feed everyone, 1 or 2% of people can work in farming and feed everyone. And I think we have a similar thing kind of ahead of us for white collar work, which is the whole back end of a business can just be way lighter because you have a smaller number of people overseeing the bots do a lot of it, which frees up them to work on other things, and that they have more abundance. Obviously, the big risk factors are in the concentration of gains that come, how societies deal with this. So I do think that we are in a period of heightened polarization that we're going to be for the foreseeable future, but I think ultimately productivity gains are a good thing.
You're now famous for nothing stops this train. I think that pretty much everyone in this room probably believes that. Is there a world where the people in this room actually ask the government to print more money, not less, because of AI, tariffs, and these kind of deflationary forces, where it's almost like we're so used to money printing is bad, that leads to consumer inflation. I want to avoid this. Yelling at the government is a good idea because they're dumb. It does feel like, hey, wait a second, if we get these big deflationary forces, like we may need them to print money. How do you think through, good or bad on that front?
I think people tend to like money printing when the printing goes toward them, right? So, for example, during the whole stimulus and the aftermath of the lockdowns and stuff, industries are trying to make sure that they're getting, bailed out, and so I think that it's one of those tragedy of the commons situations where, everybody suffers from the debasement, but not everyone suffers from it equally. If you're in finance, it's like people here, you can short the fiat currency and be long assets, and you can actually benefit from debasement. Whereas people who, they work every day, their salaries are denominated in dollars. That's a friction that they have to go through every time they're trying to get a raise, every time they're saving. But I do think that, going forward, the reason the deficits exist is because people want them, and they're all fighting over the pie to make sure that they're getting it. Right now, it's going toward healthcare. It's going toward the aging demographics. The top-heavy Social Security system we have. It's going toward defense. To the extent that we do get job losses from AI, if we get a more pessimistic scenario where we do get kind of pretty weak labor market, I think that you'd see more people clamoring for answers from their politicians. And if it hits a critical mass, then that's an avenue of money printing, and that's a whole nother part of the deficit that I think we'll see.
It seems like right now we have a higher growth, lower inflation environment. They're obviously the administration saying, hey, we're going to get to 5, 7. I think I heard Trump say 15%. These are really high GDP numbers. Historically, high GDP growth means high inflation to some degree. Do you think we can reach some of these numbers on the GDP side? And then what do you think would happen on the inflation side? Is there still going to be that kind of correlation?
Yeah, one of the tricky things is that the GDP growth we're seeing is very concentrated. And the deficits they feed into the GDP calculation as well. So basically, anything that's kind of focused on AI or on the receiving side of deficits is generally booming. Whereas the long tail of other things is the classic K-shaped recovery that it's called, or two-speed economy. That's very real. The short answer is, long as energy is flowing and there's no bottlenecks, that does a lot to keep inflation down. Almost any kind of major inflationary cycle in history usually has high oil prices associated with it. So anything that either the administration or globally can be done to make sure that oil is not the bottleneck and natural gas is not the bottleneck and power is flowing in general, and pro-nuclear type policies, whatever the case may be, depending on the country, that's the place you can get to where you have pretty high growth with inflation that's at least under control. And so really when analyzing if inflation's going to come back or not at scale, I think you start with the oil market and go from there.
Every time you put out your free monthly piece, I send it around to as many people as I possibly can. It's always excellent. Where can people go and subscribe to that?
LynnAlden.com.
All right. Lynn Alden, everyone. Thank you.
Thank you.
All right. Next up, we have Matt Hogan from Bitwise. Hello, sir.
All right.
Bitcoin's going down, but you're telling me that advisors are still just as excited as they were. Institutions are just excited. Tell me about the conversations you're having with a lot of these kind of more professional allocators right now.
Sure, yeah. I mean, I was in Miami last week. I met with about 50 advisors. They broke down into two camps. One had bought Bitcoin last year, and that camp was holding. They weren't buying more, but they were holding. The other hadn't bought Bitcoin yet, and that camp was licking its chops. We did this survey of advisors. We asked 400 of them that bought Bitcoin in 2025 if they plan to hold, increase, or decrease their exposure. 99% said they plan to hold or increase. Those numbers actually shouldn't be surprising because the people who bought ETFs in 2024 and 2025 stuck their neck out. It still wasn't popular. It wasn't mainstream. So the level of conviction was not 51%, Anthony. It was 80 or 90%. And so, the financial advisor, family office, and lower end of the institutional scale is diamond hands in Bitcoin right now, and I think that's going to continue in the future.
They went from a 0 to 1, right? They said, okay, we don't own any, now we own some. What were the allocation sizes? Are we talking like 1%, 2%, or are people going higher?
So it's in the advisor space, the right way to think, most of them are like 2.5%, maybe 5%. But the more important statistic is it idiosyncratic or across their book? An advisor will have like 100 clients. What we saw a lot of people do was allocate for the 5 clients who were talking to them about Bitcoin, and then over time they expand that. So that's actually the bigger expansion than the percentage. The percentage has gone up. When Bitwise got into the market in 2017, advisors did 1% maybe. Now they do 2.5 to 5. But the bigger change, the thing that will re-accelerate flows, that I think will eventually drive Bitcoin flows to something like $50 billion a year, is people going from 2% of their book to 100% of their book. And we're seeing that in Bitwise at an increasing cadence.
Just like a model portfolio, every client gets whatever, 2.5%, 5% allocation.
Yeah, just slam it in there. Yeah, as a fixed percentage. We're seeing that, almost every week someone calls us up and wants to do that kind of thing.
Now, when you think about these folks going from I have no exposure to Bitcoin exposure, is it just Bitcoin? Is it Bitcoin plus some other cryptos? Like, how are they thinking about it? And I always go to, I've got 100 clients. I'm going to, on average, take, 20 grand out of their portfolio. I'm going to put it in. Does Bitcoin get all 20 grand, or does Bitcoin get, half, and then other cryptos get the other half?
Yeah, so historically, let's say for the first 18 months that ETFs were on the market, it was almost all Bitcoin. Advisors needed to go through the same journey everyone else in crypto does, which was learning about Bitcoin and then learning about other assets. I think going forward, it's going to be more diversified. We get an equal amount of questions about stablecoins and tokenization as we do about Bitcoin and debasement. So I think it may be like 50-50 Bitcoin and other assets. I think index funds will do very well. This is the marginal buyer of crypto. I think that's an important note. They're going to want diversified exposure. They're not as tribal as the OG retail investor, and I think that's going to change what attracts assets.
Now, what are the things that are keeping the folks who have not yet bought? Is it their clients are going to fire them? They don't understand it. They're scared. They just saw it drop 50%, and they're like, I can't put that in my portfolio.
Actually, the 50% drop doesn't bother them at all. I know that sounds weird being in crypto, but if you tell a financial advisor that Bitcoin is volatile, they're like, duh. So they're not shocked by that. It's always these little nagging worries. It's the FUD things that we sort of make fun of on crypto Twitter. So like quantum is a thing. All it takes at an investment committee is one of the 8 people sitting there to say, yeah, but. And that has prevented most crypto allocations. I think in 2024, there was no yeah, but. It was like BlackRock is buying it, Abu Dhabi is buying it, Harvard is buying it. It was easy to make the case. Quantum has actually entered the equation as a yeah, but. Doesn't matter if you think quantum is a present risk. it is the yeah, but in these investment committees. I think that's one of the things that holding them back.
What do you guys say when they ask, hey, is quantum a risk, or how should we think about this?
Well, we walk through the logic of why it's an addressable risk, and we qualify the size of the risk that it is to Bitcoin, and I think that's helpful. But it's more important that Bitcoin core devs take steps to publicly address that. I actually think we saw that a little bit this week. I think this is now going to be a bullish catalyst moving the market forward.
How much does Fed policy, macroeconomics, all this stuff play into maybe not just the Bitcoin decision, but just the financial advisors in general, right? I can imagine some financial advisors probably love it, and it's kind of astrology for them to talk about. I think other people probably are like, hey, Peter Lynch said, spend 15 minutes on macro, you spent 13 minutes too long type thing.
Look, macro has become a much bigger part of every investor's view of the world since the COVID era. So it definitely comes up there. Terms that we didn't talk about 2 years ago, like debasement, like deficits, are now everyday discussions. So I think most advisors are now macro advisors. I think it was like a bad word pre-COVID. Now it's central to everyone's theme because it drives so much of the economy.
One of the pitches, I think, around Bitcoin used to be that it was a non-correlated asymmetric asset. And for those that didn't know that, that was like music to the ears of financial advisors and portfolio managers. Now there's a lot of talk that Bitcoin is actually correlated to software stocks or other types of assets in the market. What is going on there, and do the advisors care?
Yeah, those questions come up, but they're belied by the data. If you look at the correlation of Bitcoin to the S&P 500, which is the anchor of most people's portfolios, it's never been above 0.5 effectively since it started. 0.5 is the dividing line between low and medium correlation. It's still a diversifying asset. Has there been some correlation to software? Yes, I think that's idiosyncratic and not driven by fundamentals. But mostly, it's still thought of as a diversifier, right? The data just suggests that it is.
When you guys think of the long-term capital that can come in here, you guys published this paper. Talk a little bit as to what are the assumptions that you're making there, and then what would the impact be?
Sure. We published the first ever long-term capital market assumptions for Bitcoin. The most interesting thing about that is that no one asked us for that in the first 8 years of Bitwise's existence. And then last year, we had 12 multi-billion-dollar national firms ask us to publish that because that's what they use to decide to make their portfolio allocations. The number we came up with Bitcoin was $1.3 million by 2035. The way we get there is actually pretty simple. If you look at the historical growth of gold, not including this run-up, if you sort of average it out over the last 10 years, and you extrapolate that forward 10 years, and that's the store of value market, and then you assume Bitcoin takes 25% of that market, you end up at $1.3 million.
Well, so you're saying if you take the growth of the gold market,
Yeah.
which historically operated without Bitcoin in the picture,
Yeah.
you just say, okay, it's going to keep growing at the same rate it has been growing, and Bitcoin only gets 1/4 of all of that flow, then this is where you get the
You get $1.3 million. The mistake people make when they make the gold analogy is that they forget that that market is growing, right? I came from the ETF industry. I remember when gold ETFs launched. The gold market was $2.5 trillion. It's $25 trillion today, right? That market is growing. And so the percentage that you have to take, the reason it's a powerful argument is in a world that's increasingly digital, in a world where crypto investors are getting older, wealthier, and control more money, the idea that we'll go from 7% of that market to 25% of that market in 10 years is not a crazy idea. That's actually a pretty easy argument. And then if you back out of that, what that means mathematically, it's $1.3 million. I think it could grow significantly more than that. I think it could easily take half the market, then it's 2.6. But you get to 1.3 with these very conservative assumptions. What's happened for the last 10 years will continue to happen. And as Bitcoin continues to mature, it will go from 7% to 25. I don't think that's outlandish. And that's the number you get to.
When you look at, okay, if these advisors are putting 2.5 to 5%, this thing's going to grow to 1.3 million. Do you also look at what the other assets in their portfolio may do and kind of project out, okay, if Bitcoin's in your portfolio versus not, here's a general return profile that you should think about on a percentage basis?
Yeah, I mean, both backward looking and forward looking, it's just a massive increase in your absolute return and your Sharpe ratio. If you look at the average long-term capital market assumption for the next 10 years across Wall Street for equities, it's about 5%. For bonds, it's about 4%. For Bitcoin, we're calculating a 28% CAGR on those conservative assumptions. So it has a huge influence on your portfolio. And of course, it's asymmetric, right? You have a 2.5% downside. You have a doubling of your total return upside. I think it's a very convincing argument. Eventually, I think it will win. You're actually seeing it at the largest platforms. I know retail may be scared of it right now, but you're seeing these allocations at large $50, $100 billion platforms because they recognize that long-term trend.
What about public funds versus private funds, right? Obviously, the ETFs are the most successful product launch in history. I can imagine those conversations with getting onto certain platforms and being the kind of chosen or one of the chosen ETFs. It's a very different thing than, hey, give us your money and we're going to put it into a private fund or kind of an alpha-focused fund. How do you just navigate these conversations? And do you see, hey, I'm going to go and buy the ETF first, and then people push into these other funds? Or do some people actually come in through the private funds and, eventually maybe trickle up to the ETFs?
Yeah, most people want the public ticker first, except for at the far end of the institutional spectrum. If you go to the far end of the institutional spectrum, they want a market-neutral hedge fund or a beta-neutral hedge fund that sort of captures some of the alpha in crypto. Everyone else is ticker first. The actual expansion is Bitcoin to Bitcoin, ETH, Solana, to index-based exposure, to, maybe I want an option overlay strategy in an SMA. That's sort of the direction of sophistication travel for financial advisors. Institutions still want the private exposure, by and large. Of course, there's some that own Bitcoin directly, but by and large, they still want that.
So that's interesting. They go from Bitcoin to Ethereum and Solana, not Bitcoin to, just give me the top 5, give me the top 10. It's kind of like single names until they then make the jump.
Yeah, try to explain Avalanche to an institutional investor. It has a very good story, but you need a long time, right? And they need to learn about it. It's similar to what we've seen in every market. This is actually no different. If you go back to the early days of emerging market investing, the only thing you could buy was large caps. And then EEM launched, and it was large and mid caps. And today, emerging markets is large, mid, and small caps. This is just the nature of how people invest. You're seeing it in AI. People want to own the hyperscalers and OpenAI. They're like a lot of really interesting AI companies. Eventually, people will migrate there. So yeah, they start at the top. They go to the top 3. Eventually, they'll get to index and broader exposure.
And what about miners? Strategies of the world, like there's other public tickers that now these advisors can go and look at. Do they just evaluate those on an individual equity basis and they're more so comparing it to other single names they may own, or are they looking at that as substitute exposure to Bitcoin?
Yeah, I think many people, MicroStrategy specifically, think of it as a levered play on Bitcoin. We still hear that. I think on the miner space, people are most excited about the AI tilt. But we see a lot of interest in crypto equities. Our crypto equity ETF, BITQ, was up last year, and that caught a lot of attention. The average revenue growth for crypto equities is higher than almost any other industry in the market. That captures attention. But I think most of those people just buy an index basket. If you're deep into crypto, you probably want to own crypto directly. If you're more interested in crypto stocks, you probably don't have an opinion on this miner versus that miner. You just want sort of something that's related to crypto, and they go in through the index route.
I think most people in this room probably expect there are the basic questions that an advisor would ask. What are the ones that you think are the tough questions or the unique questions that you're like, hey, this room probably doesn't know? You mentioned quantum as one. Are there others that you guys are like, hey, we haven't heard this before, we need to start having a good answer for?
Yeah. I mean, the hardest questions are questions like what keeps you up at night or what could go wrong. And the reasons those are hard is we can say those things, but the probability of them is very low. But once you sort of introduce it into their minds, it's like a little bit of a virus. So those are really the big questions. I think outside of Bitcoin, there are tough questions on valuation that people ask a lot, right? Revenue, GDP versus the valuation of layer ones. There are answers to those questions, but they aren't easy answers. And those questions for more sophisticated advisors do get pretty complex.
And then I've always thought that Bitcoin will infiltrate every single one of these organizations, institutions, et cetera, just as young people take over, right? Kind of like if you're into Bitcoin and you're 25 years old, in a decade, you may be the CIO or on the investment committee or whatever. Are you seeing that, or are you actually seeing some of the people who were already there kind of changing their mind?
No, of course you're seeing that. I mean, why are all the wirehouses approving Bitcoin? Partially, it's more mature, but partially, the 25-year-old who was into it in 2013 is now a managing director. And we've seen this in every industry, right? I saw it in ETF land. No one wanted ETFs. Now those people are running asset management divisions. It's funny because the market sort of downgrades crypto demographics. It's degens, it's young people, it's people with no money. In every other category of the world, you love young, financialized, fast-moving people. They are the future customers. That's crypto's customer base. So absolutely, the demographic trend is unstoppable. And maybe they're managing directors now. In 10 years, they'll be CEO. And I do think that's a major long-term driver of crypto that gets overlooked.
What are these people doing with tokenization and stablecoins? You mentioned earlier that's kind of the other half of the basket. Obviously, if they just buy, USDC or USDT, they can't make money. So what are they doing there?
Yeah, so they want to know how to invest, right? That is the answer. And the answer to that is you need to buy layer one assets, DeFi, and companies that are building in this space. I think people make foolish bets when they pick one or the other. We don't know where the value will accrue. You need to own both Ethereum, Solana, and Circle, and Figure, and Robinhood. And so I think the smartest people in that space are avoiding the trap of precisely pricking the future and just saying, look, stablecoins are going to be multi-trillion dollars. Tokenization is going to be hundreds of trillions of dollars. Give me exposure to that market. If I own both ETH and Solana, it all ends up on one or the other. I'd rather have that bet than pick the wrong fighter, even though I got the trend right. So that's what we're seeing. We're seeing people buy across the spectrum, index-based exposure to the theme and thinking it's a 10-year hold.
When these large banks are talking about, take Larry Fink, right, an asset manager, or take even a Jamie Dimon, who's kind of changed his mind a little bit. That seems to be kind of like Paul Tudor Jones and Stanley Druckenmiller in 2020 coming out and saying, hey, we own this stuff. Who are the next, big dominoes to fall that would make your job easier, right? Is it sovereign wealth or who?
The funny thing is you just need people to pay attention. On the tokenization front, it's wild to me. This week, you had the chair of the SEC, the most important regulator in the world, say basically every asset's going to be tokenized in 5 years. You have Larry Fink saying every stock and bond will be tokenized. You had Martin Small, the CFO of BlackRock, said we're going to tokenize all our ETFs in the next 3 to 12 months. And most people are like, yeah, whatever. These are the most important people in the world. Say there's a freight train coming down right now. I just think we need to repeat that, and start having people feel it in their wallets. But I think it's almost inevitable. There's no extra special person. We already have Harvard Endowment making a big bet on Bitcoin. We have sovereign wealth funds making a big bet. It's just going to accumulate over time.
You guys create a ton of great content. Where can people go find out about the Bitwise funds or the content you guys post?
Yeah, sure. So go to bitwiseinvestments.com. I write a weekly memo there called the CIO Memo. You can sign up for it. Find us there.
It's excellent.
Thank you.
All right. Thank you guys so much, Matt Hogan. All right. Next up, we have Kathy Wood. I think Kathy's going to get pulled up. She's going to be remote. See if we can get her pulled up here. Kathy, can you hear me?
I can hear you, Pomp.
Oh, amazing. Got your sweet voice. You look great. You got a great background. It's like you're a professional podcaster now. This is incredible.
No, we have a great team. They've put all this together, so yeah.
All right. Let's start with inflation and deflation. One of the things that's interesting to me is I've been talking about, deflation is a bigger risk. I see you tweeting about it. So you're, in spirit, we are locked in this together. What is your read on why deflation is a bigger risk?
So it's a risk and an opportunity. So there's bad deflation and good deflation. If you look at the government measures, they will tell you today we're kind of stuck in this 2 to 3% range. If you look at a more modern indicator, Truflation, I think you feature it as well, Anthony. I don't know if I should call you Pomp or Anthony, but anyway.
Call me a Kathy fanboy.
Oh, you're funny. Thank you. So Truflation is down to 0.8%. And so it, too, was stuck in that 2 to 3% range. It is resolving to the downside. And I think it's going to go negative. When I see Pepsi cutting the price of potato chips and Doritos by 15%, I take note. And when I hear Coke saying, yeah, it seems like there's a bit of a backlash against price increases, I take note. Today, the existing home price inflation rate dropped to 0.9% on a year-over-year basis. And we think that's going to go negative. New home prices are already falling on a year-over-year basis. Gasoline prices falling. And then the good deflation is associated with technologically enabled innovation. And, the AI boom is massively deflationary. The AI training costs are dropping 75% per year. AI inference costs, so what it costs when you query ChatGPT or Grok, what it costs to answer that, that's dropping 85 to, if you believe DeepSeek, 98% per year. And I think the productivity gains that we are seeing accrue to enterprises, that is going to turn around in a number of ways. One of them could be price declines. So many people think, these corporations are going to simply increase their margins. Well, China is exporting deflation. I know with tariffs we're countering it, but isn't it interesting that our inflation rate did not accelerate with tariffs? It remained stuck. I think we're going to see a lot of price declines in the future.
When you think of the AI explosion, I think it is operating obviously in this complex environment. So you have deregulation, you have tax cuts, you have deportations, you have the AI boom, you have a global monetary reset where we are trying to weaken the US dollar, you have the tariffs, you kind of put all this together. How important do you think is it that the president, the Treasury Secretary, and the Fed chair nominee all seem to be, on the same team? Seems like they are going to go and implement this plan, which means that for investors, maybe it's going to be a little bit more of a complex environment to navigate in the coming years as we go through this kind of reset.
What's so interesting? Many people are asking, is this just a hype cycle, and should we pull away? I don't know if you've seen the markets in the last couple of days, but now algorithms are assuming that AI is going to destroy industries wholesale. This is not what happened during the late 90s, and I will get back to your question. In the late 90s, when Jeff Bezos said, we're going to invest so much more than we expected because this opportunity is so great, and that means we are going to lose so much more money than you, shareholders, expected us to lose, the stock absolutely took off to the upside. Any company saying that today is getting hammered. So we are in a completely different environment. Your question was the various parts of the administration being united. You mean when Kevin Warsh comes on board? Right now, of course, Powell is not at all aligned with Trump. You mentioned dollar devaluation. I don't think that's what's going to happen. Treasury Secretary Bessent, who knows all about currency markets and knows how important they are, is saying a strong dollar is in the interest of the United States. Now, many people look at what happened last year. The dollar went down quite significantly. But if you look at the dollar in a long-term context, just go back to the early 70s and see where we are now. You'll see that the dollar, again, this is relative to other currencies, not relative to gold. The dollar is at closer to the upper end of the range, with the exception of the 85 blowout of the dollar, than it is to the lower end. And I think the policies of this administration suggest to us return on invested capital here in the United States should go up relative to that in the rest of the world. What do I mean by that? We've got massive deregulation. This government understands how much we have hurt ourselves relative to China with thickets of regulation, and they're trying to peel those away as quickly as possible. We got a tax cut where, for the first time in our tax history, for the next 3 years, as long as the construction of a manufacturing facility starts by the end of 28, during its first full year of, or during its first year of service, the company building that facility will be able to depreciate it not over 30 to 40 years, but in the first year. So massive tax refunds coming back to reinvest. Where we are seeing tax cuts for the consumer to some extent, certainly at the margin, in tips and overtime, Social Security, and autos. So I think we're going to see massive refunds here in the first quarter, and I think that the rolling recession that we've been in for the last 3 years, PMI being down, negative, for saying manufacturing's been negative for the past 3 years. We've seen housing and got a terrible number today, 3.9 million. We're back to the lows in existing home sales. I think we are going to shift from that to a rolling recovery into a productivity-driven boom. And I think one of the things that is becoming obvious when you look at how they revised the employment numbers down by 860-something thousand over the last year, if in doing that, what they effectively said was, okay, given this level of GDP, and we're more sure about GDP because of national income accounts and so forth, it must mean that productivity was higher last year if we revised employment down like that, which in turn means that real GDP growth was higher and inflation was lower. They got the mix wrong in the GDP accounts. I think we're going to start talking about deflation more and more, and I believe interest rates are going to come down more than people expect until this productivity-driven boom is obvious. So I actually think the U.S., from an investment point of view, is going to do very well over the next few years. You wouldn't know it from the last few weeks, but I think that we're in the flip side of the bubble. We are absolutely in the flip side of the bubble. Investors just threw money at the bubble when the technologies were not ready and the costs were way too high. Now we're in an environment where we're ready for prime time with all of these technologies: robotics, energy storage, AI, blockchain technology, and multi-omics technology. And so I think we're going to have a boom, and the U.S. is going to do very well.
If we get deflationary forces or get actual deflation, is that bad for Bitcoin in the short term?
No, I don't think so. Bitcoin is a hedge against inflation and deflation because the chaotic part of this is, and it's ripping through the markets now, a lot of traditional industries and companies, being brought, the whole SaaS space, the disaster, as they're calling it. We think there is merit to that particular one, but I think you're going to see disruption all over the place because the 5 innovation platforms that I mentioned are going to disrupt the existing world order. And what does that mean? If these technologies are so deflationary, it's going to be tough for the traditional world that's gotten used to sort of the 2 to 3% inflation to adjust. They'll have to embrace some of these technologies faster than expected. So the idea of counterparty risk, I think, is beginning to surface. We've seen it with First Brands. We've seen, private equity and private credit, especially, is where there have been a lot of excesses. SaaS. They are too exposed to that. You know, are we going to see counterparty risk manifest more broadly? If so, Bitcoin doesn't have that problem. And so it is a good hedge against deflation as well as inflation.
As a proud Tesla shareholder, I'd love your thoughts on Elon, XAI, SpaceX combination. Do you think he's going to combine it with Tesla? How you look at all the work that he's doing?
I think that ultimately he could, and he started. We have been using the word convergence for a long time. I'll give a plug to our Big Ideas 2026, and you'll see a section by Brett Winton, our chief futurist, called The Great Acceleration. And you'll see a sphere in there showing how all these technologies are converging one with another. And at one point in the last, I'm going to say 6 weeks, Elon said, "You know what? I think my companies are convergent stories." So we thought it was interesting he used that word. So SpaceX XAI does not surprise us at all. I think he's going to let Tesla run here for a while because the robotaxi revolution is just beginning. And I do think he wants that story to become very clear to investors. And it will. He doesn't want to, combine with anything and confuse what's happening here. And as you know, we have very big expectations for robotaxis. We love it that Tesla and Waymo are competing against one another. And we think, the stock, Tesla stock, if you look at it, it's been in a very large trading range for the last 5 years. And I remember the last time I said that was when Tesla was going through manufacturing hell, and there were people out there saying Tesla's going to go bankrupt, there's no demand for these things. It had been in a very wide range for 6 years back then. And I said, the history of long bases like this is they either break out or break down. And we very much think Tesla's getting ready to break out again. And then Elon will have more degrees of freedom.
What are you worried about in 2026 from a portfolio standpoint? What are the things you're paying attention to, and what could potentially change your mind on some of the allocations that you've made?
Yeah, what's happening in the last week or so in particular reminds me of the early days of COVID. Nobody knew what to do, and so algorithms just sold everything off except for, the safest stocks, the most cash-rich and cash flow generative companies. And I remember as I was looking at it, it's an algorithmic move taking place in the market and causing a bit of a downward spiral in innovation-related stocks. Now, unlike COVID, we're probably not going to have massive fiscal stimulus in the way that we got back then. So we're not going to come out of this with a big boom. But they're selling the baby with the bathwater again. And so it gives active managers an opportunity to, in our case, concentrate towards our highest conviction names. I think the biggest risk out there is that Powell, who will only be in place until May, that Powell is not, and the other Fed board members are not understanding the deflationary undertow that is beginning to take place here, and they will not, because they're not looking at the right signals, and because they're looking at government data, which is all wrong, and based on the industrial age. They could miss this and will be forced into a response when there's more carnage out there. I think that's what I'm worried about right now. I think, though, I think this is the opposite of the bubble, tech and telecom bubble. Right now, we're seeing all of the beneficiaries of AI, and every stock in our portfolios, we have been looking at through the AI lens for actually the last 5 to 10 years. And so we believe we have the beneficiaries in our portfolios. But there's so much confusion out there on AI that, you know, it's baby out with the bathwater, as I just said. And then you have this overlay of the policymakers once again being late. I think this is going to change radically in the other direction. It spins here. You know, a lot of people in the crypto market and in our markets are technical analysts, and they use the 200-day moving average, 200-week, and they see it break. So, you know, there's an algorithmic technical move taking place here. And, you know, as I always say to our team, truth will win out. And we definitely are on the right side of change, and we believe we are in the right companies that will benefit mightily from not only the AI revolution, but the convergence among these technologies. When you think about the way traditional research is set up in traditional asset management, it's set up incorrectly to understand what's going on here. It's set up by sector or industry or sub-industry. Many companies have 5 healthcare analysts, 5 consumer analysts. In the world of innovation, the right way to look at the world today is by technology. Involved in those 5 platforms are 14 different technologies. We have set up our analyst responsibilities by technology. So they are experts in a given technology, and they are generalists when it comes to sectors and industries, because these technologies are converging, and they are going to impact every sector, every industry, every company.
Kathy, you got me pumped up here. This is amazing. All right, well, we appreciate it very much. Keep doing what you're doing. Everyone here is missing you, but next year we're going to get you in person. So thank you so much.
All right, thanks so much, Pomp.
All right, bye.
Thank you, bye-bye.
Next up is Jordy Visser. Oh, you got a suit jacket on. It's supposed to be important. I thought you were going to wear your jean shirt today, and I was going to get excited about it.
No, well, last time we did this, I had shorts on.
You did have shorts on in my
I brought a coat for you today.
Let's talk about...
By the way, before you ask me a question, I disagree with half of what Kathy said. So if you want to start there, we can go there.
Trust me, you already have told me that, so I can't wait. Which parts do you disagree with? You should have had them just like battle it out, you know? It would have been amazing.
No, this is really important. And I mean, I vehemently disagree wholeheartedly with this COVID comparison. So for all of you, your portfolios, everything, I will tell you a fact. AI is not a temporary thing. So when I hear someone compare this to COVID, that would mean this is just a panic thing. This is not algorithmic. So, you know, if you guys have listened to our show, I have been emphatic about the fact that by 2030, most of the S&P 500 companies are going to be disrupted. So I just want you to look up a statement, and this is what I'm going to do on the weekend. Elon Musk has said that AI is a supersonic tsunami. What is happening in the market right now is exactly that. Software names can't catch a bid for a reason. They're making money. This is not about what they are today. A growth company, and this will all lead into positive things for Bitcoin eventually, so don't worry about it. But when Kathy talks about this being temporary, that is a mistake for everyone who owns software names. This is never going away. There are no winners in terms of winning. The winners are not public companies. So when Kathy tells you there are winners in AI, I don't work for a public company anymore. I don't work for a company. I chose that because the power of AI is for individuals sitting at home. And guess what? There are 7 billion people on the planet who've never been able to partake in capitalism. That is the positive story for Bitcoin. But everyone has free intelligence now. Everybody. So what is going on literally as we sit here, and at a morning meeting today, I said to everyone, Opus 4.6 came out last week. I didn't have the time last week to spend with it. Guys, it's 5 times more powerful than Opus 4.5, which is what caused this whole disruption. So we are speeding up at a point where recursive self-improvement is happening as we speak, which means the models are building themselves. So to sit there and think that there's a public company with individuals and friction, having worked in it and watched the pantry conversations with people that don't work hard, this is over. Meaning this stuff is real. So the market has to digest this. It has to go through this. And I bring this up because this is not going to change. So the hyperscalers are at risk. The software companies are at risk. Not to collapse because they're going to make money. But what is happening in the market is they are dealing with the fact that no company now has a moat. Their businesses are no longer defensible. And my attraction to Bitcoin was based on my belief that the only moat that Bitcoin has is what Mike Novogratz said. It is a community-based asset that is built on code, and the game of investing money is a game of musical chairs. There's a rotation happening, and people are avoiding everything that's built on code. They're moving it into physical things, which will continue because we're in a race to build out the data center. So I do not want people leaving here thinking they can just go out and buy any technology innovation name, because AI is coming for all of them, and I think it's going to be a long, long road for a lot of these software companies over the course of the next 5 years trying to deal with this.
Google, I think, was mocked 2 years ago. They're behind in AI. They don't know what they're doing. They're asleep at the wheel. Now I think a lot of people are saying, wow, Google is doing very well, and they're going to be able to leverage their distribution and this tech they've been able to build, et cetera. Why doesn't every one of these tech names just go build AI, use AI, incorporate it into their business? Like, what is the disconnect there?
Well, there's 2 problems with this. So, and again, Google's going to get caught up in this as well, even though their model's great and everyone loves them. In the most recent earnings reports, we had a total of $1.2 trillion of what are called RPOs, which you can think of as liabilities or future orders that hopefully they'll get. And those are based on building out data centers. And in this country, we are getting data center cancellations every single day across the country. You're getting all toxins and stuff that are showing up. This is going to be a major story. I think Google falls into the same trap. The only way they can monetize this is actually to have the ability of letting all these AI agents run on their data centers, but they don't have the data centers to handle the flow and the volume. We're at the agentic acceleration right now. AI agents are working, they're running, they're going fast. And so the only way that they can make the money off it at this point is through the cloud usage, and they're not going to have enough cloud usage because they can't get the data centers. So when you mention Google, they fall in the same micro problem as Microsoft. The only difference with Microsoft is they actually have something that's usable. But there's a new problem that also fits in with these companies that people have to understand. I'm finally using a Chinese model. I've never done that before. The reason I'm using now Kimi 2.5 is because I have my own machine with AI agents now. And again, I'm old school. I didn't know how to do anything on a computer, honestly, a year ago, 18 months ago, other than the basic stuff. And now I have AI agents running on a Mac Mini inside my apartment, and I'm using a Chinese model because it's free. So the problem with Google and all these places, and this does get to the deflation thing that Kathy mentioned, and it's something that you've talked about, it's really hard to avoid the deflationary aspect. And since most people, and I was just at a conference where 80-something% of endowments and foundations thought inflation was going to be higher a year from now. So the reality is we have a deflationary situation that's happening, and the reason is because AI is driving that deflation as we speak.
Do we actually get to deflation, or is it just like this disinflationary where like we'll still have a little bit of inflation, it'll just be much tamer and kind of under control? Maybe it's 0.5%, 1%, 1.5%, but we don't actually go negative.
Yeah, now you highlight trueflation repeatedly, which is basically.
Do you like it?
Yeah. No. So the difference between trueflation and core CPI is pretty much all the shelter calculation.
Well, one can count, the other can't, but yeah, go ahead.
Yeah. One uses 80,000 inputs. One uses what they say 35 million inputs. So we'll go through what's better, what's not. But the shelter component and how you deal with shelter is the difference in the calculation. So if history serves well, unless we're going to see a bounce in the housing market, which I see zero chance of that happening, given the fact that people are under pressure at their work, I don't see that going on. If the stock market falls, you're definitely not going to have it. What would cause deflation is if the stock market falls off. And the reason I brought up the supersonic tsunami, if all of you raised your hand and I said, what's the largest position in your portfolio? And maybe you've got a trading account, but if you have a pension or you have anything, your biggest positions are software stocks. Not because you chose them, but because you're in the S&P 500 or you're in some kind of ETF that has mainly software in it. So I advise all of you to check that and go through it, because that's the stuff that's pulling the market. At some point, if you imagine trying to transfer all of the money in the world so quickly, and that's what Elon Musk said, there's a tsunami which is structural, but there's supersonic, which was all about the fact it's going to happen so fast that individuals, companies, governments will not be able to move fast enough. And that's what's starting to happen. I'm worried by what I saw in the last week, mainly from Anthropic, because if you guys didn't see it, one of the lead researchers on their safety group resigned. And he talked about why he resigned. He's going to do poetry now. That's how scared he is of what's coming. Dario Modi wrote a paper on the negatives of AI. And the reason he's writing that is because he has models 6 months ahead. We're at the point now where they said, we had the model Opus 4.6 go through our code. This is a AI company, and see how many bugs they could find. They found 500 security places they could break into. That is the power of AI agents. That's the power of these models. If you can break into Anthropic, they can break into your bank account and everything else. So we've reached a point where the governments and everyone in the world just has to deal with the fact that this is no longer a game. We've reached the point that security is going to be an issue. And again, if I go back to the Bitcoin story, this makes cryptography much more important. Whenever I hear quantum, and quantum's not close to breaking anything there, we actually have something that will break things faster, which are agent swarms, and those are picking up now. And that's why go read about the safety person who resigned and went to go do poetry, and go read Dario Modi.
So let's say everything you just said is right. What do investors do? Do you invest in private companies? Do you hoard seashells? Do you buy Bitcoin? Like, what do you do?
So in the basics of what the government will do, there's lots of companies that are going to make money. And in the case of the hyperscalers, what we're talking about now is not the S&P 500 not making money. We're actually talking about multiple compression, meaning they're moving the multiple of the market down. And the reason they're doing that is because every industry is now under attack as to whether their business is actually defendable against this side. Normally, that takes a long time. So one thing I do believe is that you'll get a panic. The hyperscalers are the most important thing. And when I say the hyperscalers, this is not Tesla, this is not NVIDIA, this is not Apple. This is the 4 companies spending $650 billion this year. This is Meta, this is Microsoft, this is Amazon, this is Google. They're spending $650 billion this year. If they don't get the revenues in, then what happens is their equity has to go down, and their equity has to go down from a cap structure basis. Now, again, they're making revenues over 15%, so this is not some bad story. They have the capital to do this, but they become the line in the sand for everything. My gut tells me if anything bad is going to happen, it's going to happen in the next month or two. And the reason I say that is because the condition of mutual funds and hedge funds in trying to reposition for this, and the reason they reposition quickly is because they're paid on performance. And I was in that world. A hedge fund has month-to-month marks. If they're down 10%, they have to reduce risk.
You, I think, also have this thesis of like scarcity is valuable, which is not unique, I think, to your view, but you have talked about memory shortages. You have talked about certain precious metals or industrial metals that are scarce. You've talked about Bitcoin. Is that fair to say that that is a key theme in a world of abundance of intelligence and software? You actually want to find the scarcity?
Yes.
It only took me a year and a half of talking to him every week to figure that one out.
So the beauty of of the way I think about Bitcoin in this scenario. So I'm hoping it gets flushed with everything else, and all of you should hear too. This is a temporary thing, and it's been matched up with SaaS. I'd be more worried about Bitcoin if SaaS was going higher and Bitcoin was going down. But these charts are overlaid for a reason, because they're directly linked between the VC world and the investment side of the ecosystem, but also because of it's built on code. So it should go down. And my ultimate theme has been that eventually, when software is deemed to be problematic and AI is kind of this hard thing to invest in, which is where we are, Bitcoin would start to outperform, and then all of the meetings going on that you should invest in digital assets, you'll start to see the money flow in from the public companies and from the enterprises, from the wealth management people. But it's the only growth asset that is scarce. All these other places, commodities are not growth assets. Industrials are not growth assets. Now they are. Those are cyclical. Those are value. They're not growth assets. And most money is in a growth bucket. So if Bitcoin can break away when SaaS bottoms, and that's what needs to happen, is SaaS needs to bottom. And once it bottoms and we've discounted enough, we're at the lowest multiples we've seen in the space since before the iPhone. So we're at a point where you could find a bottom at any point, and that's what I'm hoping is going to happen. But the repositioning that happens says, and the reason I say a month, normally these things carry into the end of a month when it's been this bad, and then you get another week of it, and then you bottom out. That's what I'm kind of looking for, is that the risk is for the next 3 weeks, and at that point, maybe Bitcoin's down at 40,000, or maybe it hangs in here and it seems some rotation.
Everyone in this room is an investor in some capacity, whether professionally or in their personal account. You have done this huge deep dive on using AI on a day-to-day basis. You come from the investment world. What are your tips or maybe direction that you can give to these folks on where should they start or how should they be using these tools to become a better investor?
First thing I would do is just, if you were recording what I said, just put that in the chat GPT and find where my holes are and correct me on whatever things are there. I think people should be using it every day at this point, if not for you guys, for your kids. I think it's a mistake for anyone to not realize how fast it's moving. We're past the point, and I've said this for a while now, but we are really past the point. Opus 4.5 to Opus 4.6 is shocking to me. Eric Schmidt didn't think we'd be at recursive self-improvement until next year, maybe latter part of this year. The fact that we're there now should scare the hell out of everyone, because nobody's ready for it when the leaders of the frontier models are saying it. So my big thing is get used to it, incorporate it into your life. It's only going to accelerate faster and faster. And regardless if another data center is built, it's already insanely powerful what you can do with it. So I'm on it all day long as a curiosity freak. I love it. The world's not going away. Even if the stock market falls down, you're going to have lives. Use it for your health. Use it for your kids in terms of developing new skills that they can learn to deal with this. We just created more jobs in a month than we had in a long time. Granted, they were all nurses and doctors in the healthcare field again, but there is a place where people can learn new skills. They can learn things. So I definitely highly recommend doing it, and you can always go to my website, and now I've got videos out on showing people how they can do the things that I do. I was talking to Russell Oken for a while. It was a great conversation, and I was very impressed with the way that he's thinking about it, and we had a very deep conversation on the way to think about AI as a thinking partner and how to use it in the way you do with work. But we talked about the thing it can't replace, and so you guys all know this. For all the things I said about how it's disrupting businesses, it cannot handle human context, and it cannot understand what humans want to read. I write 3 to 4 papers a week. They would not, no one would care to read them if they were written by AI. It takes my thinking about what's someone else wants to read, what's in their mind, what they're worried about, what's going on. I'm actually speaking emphatically today to you guys because I want you to hear and be lucky that you're here to hear that, hey, if something goes on in the market, you heard it from me, that there's something really alarming going on with Opus 4.6 and the safety person leaving at Anthropic, and why this is a bigger story than it should be.
Where can people go to subscribe to? You have 2 different Substacks that you are writing. There's one for HRV.
I got a lot of time on my hands.
Okay. Well, we're all going to have a lot of time on our hands when AI takes all of our jobs. So you're ahead of the curve. Where can people go to subscribe to these? One is about health and HRV. The other is about markets and technology and kind of what you're seeing there.
Everything I write Everything I do on my YouTube is geared for people to hopefully keep up on things. HRV is a passion of mine. It happened during COVID that I started to pay attention. If you guys care about your health or family members, even if it's just my Oura Ring, I don't work for the company. In fact, I asked them if they wanted to be a part of my blog, and they said no, and I said fine. But it's really meant to help people have a warning system in their life. If you've gotten to know me, I'm a very mathematically driven analytics person. Everything is probability driven. I didn't want to die suddenly from the two things that cause you to die suddenly, cancer and heart disease of some sort. And I wanted to have a mechanism that would warn me. And I had to do two things for that to work. One is I had to raise my HRV to a level that put me back in my 20s, which I did. And then the second thing is to monitor if it ever goes down sharply in a short amount of time, because that means your immune system's working. So you can find that kind of stuff on my Substack. The rest of it, my YouTube and all this, it's all related to AI, crypto, and macro. And if you haven't seen my YouTube, everything I talked about today, this weekend, I will go through a lot of this with articles you can look at, with data you can see. I don't just shoot from the hip. Things build up over time, and I'm just more concerned about AI accelerating at a time when I still see people trying to buy software stocks.
Jordy Visser, everybody. All right, next up we've got Kaylin Long. Are you ready? All right. What is going on with stablecoins? It feels like the government wants to put the little greasy hands in the cookie jar now and say, hey, we should have a part of this.
Well, just to set the stage for folks who don't know, Custodia had stablecoins in our business plan, as you know full well, since 2020. And we were going to do it inside the banking system. Of course, you know how that turned out. And obviously, the incumbents have been able to catch up while the upstarts have been restrained, which is just is. We can make value judgments about whether that should have been and the regulatory capture implications of all that, but it just is. So to answer your question, everybody's coming now, and Custodia is working with the community banks, which have not been investing in this technology, and with our bank partner Vantage. As you know, last year we issued the first bank-issued stablecoin with Vantage, which is out of Texas, and we are very close to launching our tokenized deposits platform. It was endorsed by the Texas Bankers Association last week.
When I see the debate that's going on around yield and rewards and all this stuff, do we have to get some sort of, no pun intended, clarity on, what the rules are here? Or do you think that there could actually be two different systems and just let people kind of choose, do you want to offer the rewards or not?
There are two different systems right now, right? Inside the banking system and outside the banking system, which is where stablecoins live because of the regulatory choices of the Biden regime. But I think those are converging. And you also see that tokenized deposits can pay yield. So we don't really care. I've been very quiet about that whole debate. Everyone's been beating around the bush. There's really one company that cares a lot about it, and the rest of the industry has just been pretty quiet about the regulatory fight over whether stablecoins can pay yield. Here are the numbers to set the stage. There are $5.7 trillion of demand deposits in the banking system. There's about 300 billion of stablecoins outstanding. If the 5.7 trillion of tokenized deposits get tokenized, I'm not sure that the stablecoin market becomes that meaningful, because if it's inside the banking system and you can use tokenization technologies, which is the critical piece of what we're doing, the infrastructure is built to be able to link an account-based system to wallets inside the banking system. That's the aha. And we're doing it in such a way, we're delivering it via a widget so that the banks don't have to completely rip and replace their old technology. They can just create some geography on their online banking landing page and directly deliver this to their customers. then the other piece that we've built is the ability for a tokenized deposit. When it's moving around the banking system, it stays in deposit form and can pay interest, just like any deposit. When it leaves the banking system, so it goes to self-custody or goes to a crypto exchange or goes overseas, it automatically, programmatically converts to a stable coin. And that happens within the same smart contract. Nobody's done that yet. That is the definition of building a bridge between traditional finance and stablecoins.
So is the idea that I sign up for a bank account, I get a traditional bank account with electronic QSIP-based, assets, et cetera, and then I also in that same interface will have a wallet.
Correct.
It may just be presented as another account, but the infrastructure is a wallet. And now I basically have one foot in the traditional world, one foot in the digital world.
Bingo. And it's seamless. You don't have to. So one of the problems with moving money, as you know, between TradFi and the crypto world is bringing it back from crypto to TradFi. And the hard part about that is there's a lot of friction, of course, but it's also the BSA piece, the Bank Secrecy Act piece. JP Morgan did a study 2 years ago with their own data of what happened during the crypto bull market in 2020, and they found that 88% of the deposits that went into Coinbase did not come back into the banking system. Now, let's face it, a lot of us have had bank accounts closed because we tried to send money from a crypto exchange into our traditional bank account. So there's a big piece of that part of the reason that folks who move money into the crypto space don't want to bring it back because they don't want to risk getting their bank account closed. But it's also very difficult from a just a pure friction standpoint, and we're abstracting away all of that complexity by enabling the tokenized deposit and the stablecoin to convert back and forth based on what the user's preference is and abstracting away all that complexity. It's really cool.
I don't think I've ever said this publicly. I got a better one for you. There's a major financial institution. They knew not to shut my accounts because I get on Twitter and act a fool.
Yeah.
So instead, they just asked me to take all the assets out of the account, but the account stayed open.
Yeah. And I will tell you also, Custodia is kind of a barometer, Anthony, of this, because we see a big spike when banks start closing accounts and people contacting us. Now, we're not opening new accounts, so unfortunately we can't really help. But I will tell you, Operation Choke Point 2.0 never ended, and there's been a real uptick recently in people who have been debanked looking for new bank accounts. This is not over.
How do you think about tokenization in all of this? Because, tokenized deposit, but obviously there's other assets.
Love it. Yeah. As you and I know from when we first started working together, 10 years ago or so, I was working on tokenization in the security side. Why did I pivot over to work on the banking side and payments? It's because I figured out that trying to tokenize securities isn't going to work if you don't have tokenized dollars. You've got to be able to have the tokenized leg of the securities trade the dollar leg trade in tokenized form as well in order to have tokenized securities work. We're going in that direction. Obviously, the DTC is working on this, the New York Stock Exchange, all of those big entities working on tokenization. The other piece is from the work that I did at my prior startup, Symbiont, we were the partner back then with the Delaware Blockchain Initiative. Delaware, of course, back then still is the state where most corporations are registered. We were trying to be able to have Delaware run a node on a blockchain in 2015, that long ago, to be able to natively register corporate shares on a blockchain rather than what we do today, which is really analog. Yes, you get a PDF of your corporate registration, but it's really just analog data. If we can natively register the shares on a blockchain, game changer. That has not happened yet. But, and I'm waiting for it. I think it will happen. There will be a Secretary of State. By the way, my native Wyoming, where I moved back after 30 years in New York, I think might be the first state to do it. If you can get natively blockchain registered shares, that's the game changer that then enables the securities markets to be able to tokenize. But that dollar leg piece is also important.
We're talking about taking assets that existed before crypto, blockchain, Bitcoin, and making them tokenized. Bitcoin, on the other hand, is a tokenized net new asset. It's crypto native, Bitcoin native asset. How do you see that playing a role? We've obviously seen people try to pull that into the legacy system through ETFs, public companies. But what are your current views there?
Yeah, obviously, not your keys, not your coins, right? We've learned, a lot of people have learned a lesson, including even yesterday, right? Where some of the lenders, if the lenders get overextended, turns out they may not be solvent, and you may not get your money back. And we've learned, the collective Bitcoin and crypto industry have learned some painful lessons with the bankruptcies of not just the lenders, but also trust companies that you thought were just holding on to your assets and they were outside of their estate, but it turns out big haircuts, right? I think the haircut on the custody piece of the BlockFi, or was it Celsius? I think it was Celsius, was 21 cents, right? These are assets under custody that you think are outside of the estate, but in a Chapter 11 bankruptcy, guess what? Because of preferences and the like, the cram down that can happen means haircut on assets under custody. And that is also happening in Prime Trust. I don't know what the actual haircut is going to be, but it's probably in that zip code, 20 cents or so. So a lot of folks are starting to learn or relearn lessons from TradFi about counterparty credit risk in custodians, and not your keys, not your coins. We're just back to the same.
Gold has worked really well. There's people in Wyoming love gold.
Yes.
There's also people in Wyoming that love Bitcoin, but Bitcoin's not working as well. What are your thoughts there?
I mean, Bitcoin is digital gold, right? Lynn Alden obviously has done a really great job explaining the history of why we have all these layers of complexity and layers of intermediaries in the financial system. It's because we were dealing with a very fundamental problem, which that when money was gold, it was very difficult to move the money leg. The data leg of a transaction could move at the speed of light ever since we created the transatlantic telegraph in the mid 1800s, but the money leg still had to move at the speed of matter. And now we've got the money leg being able to move at the speed of light at the same time as being able to move the data leg at the speed of light. That's what Bitcoin opened up for us. So ultimately, gold is atoms, right? It's physical matter that has to move. Bitcoin can move so much faster. It can move at the speed of light, not the speed of matter. And that's why ultimately I think over time, especially obviously this recent period from a investment performance has been an exception, but Bitcoin it is digital gold, and I think over the long term, more and more, especially younger generations who are more comfortable with the concept of crypto are migrating in that direction.
What are the big milestones left? Like what do we have to remove as barriers or obstacles? What are the things that you're looking for as, okay, these will be the things that really kind of accelerate us?
I'll point to two. Number one, a crypto company has still not broken through at the Fed. We are it's been a long odyssey and we're not done, but I'm still actually optimistic that we're going to get there. Obviously, the Fed announced their skinny master accounts proposal in December. If any of you are watching that whole thing, I actually think that what we did prompted that, because we sort of forced the issue. Fed Governor Waller gave a speech 2 days ago where he actually said that the Fed had to deal with the notion of non-traditional banks applying for clearing accounts because of the legal risk. There are multiple lawsuits. We were the first one, but there have been others since us that just keep getting sued, right? So it's more than just embracing innovation. The way he apparently described it, according to the article in Central Banking. So that's one, is breaking down the Fed barrier for us, and then the other is getting natively digital corporate shares registered at a Secretary of State. That is going to be a game changer for the securities markets.
Fed policy seems to be the talk of the Bitcoin world now. Interest rates, what are we doing on a monetary policy standpoint? The president obviously has very strict views on what he thinks that the economic policy should be. Bitcoiners historically, at least a decade ago, we didn't care about any of that stuff. It was just kind of like, is this thing going to survive? We hope so. We think so. Let's go, focus on Bitcoin. Is this good or bad that now Bitcoin is, kind of operating within this bigger environment?
So, great debate. The answer is both. It's a double-edged sword. And it goes back to, for those of you who have been around for a while, Trace Mayer, one of the OGs of this space, created, I think in 2011, an approach called the 7 network effects of Bitcoin. And the 6th network effect is financialization, and the 7th is world reserve currency. He ran the traps. It was an incredibly prescient model that he created. We've run through 1 through 5. We're in the sixth network effect, which is financialization, headed towards world reserve currency, and I believe we will get there with Bitcoin. We're in the financialization phase now, and this is where Trace and I always had a big debate, because he loved financialization, loved the fact that Wall Street was going to come in, start creating derivatives, start bringing liquidity, collapse bid-offer spreads, and the like. And my response was, that is not healthy, because all of a sudden we're going to create the same issues that would have been created in other markets. We're going to create paper versions. We're going to have derivatives, throwing the spot price around, the tail wagging the dog. That is exactly what seemingly happened last week. If you believe Jeff Park, by the way, shout out to Jeff, some great analysis on the IBIT options causing the spot Bitcoin price to collapse, right? We see these things in TradFi all the time. You see, it's not a regular occurrence, but it's not a Six Sigma event either, where you see a huge divergence between the spot price and an ETF price. It happens, and it certainly has happened in Bitcoin. And the more derivatives, it's not. Let's put it this way: it's not an accident that Nasdaq increased the IBIT options limit, and all of a sudden then we had kind of a market crash, right? Because the derivatives became the tail wagging the dog. This is exactly why I think this is a double-edged sword. Yes, it brought in new liquidity because a lot of folks just aren't comfortable with self-custody, and they finally could buy a version of Bitcoin. It's a claim on Bitcoin when you buy an ETF. It's not the actual thing, but it's just easier. And the network effects of all the broker-dealers and all the RIAs who were out there bringing their clients into Bitcoin through the ETFs for the first time, that was clearly positive, but it also was the prerequisite to what happened last week, and we will see more and more of that.
I miss Trace in the public world.
Yeah, he's doing well.
For those that don't know, Trace is one of the OGs of OGs, and created the 7 steps. He also created the Mayer multiple. Multiple contributions that are really good.
I think he got into Bitcoin when he was a teenager. He was there very, very, very early. Yep.
He helped me.
Yes, a lot of us. He helped me as well.
Yeah. Let's talk about these large banks. They show up. They probably don't care about Bitcoin. They probably care about making money, getting new clients, getting new assets, all that kind of stuff. We talked a little bit about the financialization, but I do wonder, at what point do they have to start to upgrade their own infrastructure and start to use stable coins or Bitcoin or tokenized assets? Like, it's one thing to sell it to everybody else. It's another thing when you start to realize, wait a second, this is a threat to my business and I need to upgrade.
Yeah, that's a great question. And, the headlines came out just yesterday about Goldman Sachs owns, 1.5 billion in Bitcoin. And then you read, it's actually just they own IBIT, right? So that fits within their old existing infrastructure. They're not, from what I can tell, adopting self-custody yet. And this is something that I've been warning about. For those who don't know my background, I was managing director for a long time at Credit Suisse and Morgan Stanley here in New York. So pretty familiar with the way that the very large banks work. And I think one of the reasons, I actually, when I was at Morgan Stanley, I was the one who signed Morgan Stanley's contract to enter R3, just to give a perspective for those who've been around the industry. That was one of the industry consortiums. And what I learned from that process was just how hard it was going to be. This new technology of shared ledgers does not fit well in the back office of traditional finance. And it is rip and replace, not incremental upgrade. And that's part of the reason why those consortia like R3 did not work, because it's just a massive paradigm shift for TradFi. And most have not made it yet. Some are moving in that direction, but I think this is a multi-year upgrade process. In the meantime, if the banks haven't upgraded their risk models, especially for an asset like Bitcoin, they've got some big surprises coming, because in the past, there are a lot of fault tolerances built into the securities markets, even into payments, right? The discount window, daylight overdraft at the Fed. These are things that are fault tolerances built into the payment system, that if something goes wrong and you don't have a settlement, before your books close that night, you can always roll it to the next day. That happens in ETFs, right? With the market makers having the ability to create a certain amount of more units, right? It's an over allotment option. These are sort of fault tolerances that are designed to deal with that complexity that Lynn Alden speaks about so well, that the systems don't really aggregate, or are not always in sync with each other, rather. And so the fact that can happen and the systems can get that out of sync with each other is going to take somebody down if they don't really upgrade their risk models and have the ability to do real-time monitoring, which most financial institutions to this day still do not have.
What should people here do with Custodia? Where do you want them to go? What's your pitch to them?
Well, we're the back end of this system that Vantage Bank, our partner in Texas, is the front end. So right now we're not opening new accounts. It's just keep an eye on us, though, because I think this is going to help the smaller banks that don't have the multi-billion-dollar budgets to fund skunk works. We're their skunk works. So keep an eye on it. We'll be making some announcements soon. Thanks, Pomp.
Long, everybody. All right, I got to set you all free for lunch. You have to be back here at 2:30. Don't be late, because we got a lot of special treats later today. The first conversation we're going to have is with Dan Tapiero. I don't know if he's part of the Billionaire Fantasy Football League, but he may be. And then also Robbie Mitchnick, who is responsible for the BlackRock ETF launch, the single most valuable product launch in history. So I'll see you guys back here at 2:30.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when you that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
there's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
you have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you. My point is, sometimes you realize when that. I mean, I worry about all of this stuff. When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog.
That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, and you don't have money, and may you have money again, and you don't have money, you have money. Then when you, my point is, sometimes you realize when you that, I worry about all of this stuff. When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of their life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog.
That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of their life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog.
That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog.
That's why I use Deal.
My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you. My point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of their life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Bitcoiners I talk to, they often don't realize that they actually have about 20% less Bitcoin than they think they do. Because that day when you sell, the government's going to take a big bite out of it.
And you guys seem to be very, very focused on helping Bitcoiners and crypto holders invest in these assets in a tax-advantaged way.
That's part of why we built the hack that we created.
It's a no-brainer, I think. I think every single person should go and look at this.
To incentivize folks, for the Pomp special, you can earn up to $1,000 in cashback rewards for contributing your deposit.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Can you buy real Bitcoin in your retirement account? If not, it's time for an upgrade. With Bitcoin IRA, you can buy, sell, and swap over 80 cryptocurrencies in a tax-advantaged IRA. Your assets are protected by military-grade, multi-key security and covered for up to $250 million in digital asset insurance. Take 3 minutes to upgrade your savings and open your account with Bitcoin IRA, the world's first and most trusted crypto IRA.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
BitGo is the digital asset infrastructure company delivering custody, wallets, staking, trading, financing, stablecoins, and settlement services from regulated cold storage. They trade on the New York Stock Exchange under the ticker BTGO. Since 2013, BitGo has focused on accelerating the transition of the financial system to a digital asset economy. BitGo maintains a global presence in multiple regulated entities, including BitGo Bank and Trust National Association, a federally chartered digital asset bank. Today, BitGo serves thousands of institutions, including many of the industry's top brands, financial institutions, exchanges, and platforms, and millions of investors worldwide. Stay tuned to learn more. As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
All right, everybody. You guys ready? Oh, come on. Are you guys ready? Yes, okay. All right, great. Robbie, let's go. He's coming. All right, here we go. Dan came out here without us. He's just going to come sit up here and tell jokes or something. So listen, we got a great afternoon. There's a bunch of people back there already bullshitting a bunch. Scaramucci promised one dirty joke, by the way, so he's going to be out here in a little bit. Let's start with these two guys, though. Robbie, greatest product launch in the history of Wall Street, I think the Bitcoin ETF IBIT is. Why was it so successful?
Well, it had a lot of things converging at the right time for it, right? The pent-up demand that had existed for many years to be able to access Bitcoin in a convenient, turnkey, low-cost exposure vehicle was substantial. That was true for retail, but it was especially true for financial advisors and for institutions. And so you had this moment where all of a sudden access got unlocked to the entire of mainstream finance. And it coincided with the fact that Bitcoin is an asset. You know, obviously we're in a less positive moment right now, but is a asset that has massive resonance with all kinds of people and all kinds of investors all over the world. And you put those two together, and it was somewhat unprecedented in terms of the strength of the adoption. And even today, obviously, Bitcoin's down by almost 50% from the peak. But if you measure funds post-launch, and we're now 2 years and a month after IBIT launched, it's still by far the largest ETF in history, even after this pullback, after 2 years.
That's pretty incredible. Dan, you were on the other side. You weren't launching the product, but you and all your friends were thinking about what is this going to mean for the industry. Have you seen a change in the conversations with people who you would consider peers after the launch?
Yeah, absolutely. I mean, it started in May of 23, or I think it was June, when Larry changed his mind about Bitcoin. I think that was sort of the beginning of this bull phase. He really kicked it off. And then the launch in January 24 of all of the ETFs, frankly, was definitely a legitimizer. I think the big change now is that Bitcoin, and I think to some degree ETH as well, maybe not quite Solana, maybe Solana too, but are really considered established assets that now must be considered within an asset allocation model. And I think, you know, when I did this event, I don't know, 2 years ago, or I did it last year, 2 years ago, it was still a question mark whether, you know, it belonged in the portfolio. And I think now, of course, with some of these companies, the DATs that are owning Bitcoin, plus some of the IPOs, plus the successful ETFs, I think there's really no doubt now that Bitcoin is an institutional asset. And so we wanted the institutions to come. They're here, and now the price is cut in half in 4 months. You know,
welcome.
Those two are not necessarily the same.
No, they're not the same. But I will say, you know, I've been in the broadly in the crypto space since 2012, and you know, the sophisticated investor and the world that I used to be in, the hedge fund world, is very aggressive, very smart, very intelligent. And once an asset has the liquidity of an institutional type asset, they are very happy to short as well. And they're aggressive shorters. So when you see hedge fund performance sometimes do very well, as they did in January and let's say in Q4, you know, they're on both sides of the market. So it's not like be careful what you wish for. I think we broadly as a space have won, right? But along with winning comes some other things that maybe the crypto native guys aren't so used to, which is a very aggressive investor base who will, you know, who are on both sides.
Robbie, talk about, you guys have an advantage, right? You're kind of first to market at scale. Bitcoin Bitcoin, obviously, you guys could build an amazing business by going and quadrupling assets over the next couple of years. You also are pushing horizontally, though, and offering other funds and thinking about tokenization and all these other things. So how do you think about press your advantage on the Bitcoin ETF, but also build kind of diversified portfolio or diversified business?
Well, we have to do both, but I think unquestionably Bitcoin and IBIT has been, will continue to be a massive central focus, right? It's not just launch a fund and see it's gone really well. Okay, great, let's do the next thing. There's an ongoing investment in it, in education and client engagement around it, in marketing support, and all of that continues to be a focus. As you note, we have expanded into some other products and filings, but we've done that in a pretty judicious way, right? A lot of asset managers in the space have now filed for like 10 different crypto ETFs. We have 2 in the market today. So we continue to have a very high bar in terms of what else we would add.
Dan, you're bringing venture exposure to an institutional audience.
No, not venture. No, we don't do venture. Growth. Well, you wouldn't consider the growth investing as a kind of a broader venture where there's early venture and late stage venture? No, I try to stay away completely from venture because it's in our space, it's just too difficult. We've invested in 24 companies at the growth stage. We're looking for companies generally with 50 to 100 million in revenue or more. We don't have any liquid token exposure at all. I think there are complications now as to within the space, where does revenue actually accrue to? Does it accrue to a token? Does it accrue to equity? There was a problem a few months ago with Aave. And so even projects, and I consider everything except Bitcoin, ETH, and Solana as a venture project on the token side. And on the business side, anything sort of, as I said, south of 30 million in revenue or so is venture. And so we've invested in 24 companies, 10 board seats, 2 billion AUM, and we just had a first close on our 5th fund that was pretty significant. And eventually, we'll have a few more closes. I'll tell you the one thing is, it is still remarkable to me that, as far as I know, we are the only growth fund exclusively focused on crypto, blockchain, Web3, digital assets, however you want to call it, the digital asset ecosystem, of which Bitcoin is at the core of. And especially now with the growth in stables and RWAs and all the explosion in poly market and prediction markets, all of these perps, all of these things, the overall digital asset ecosystem continues to grow, and the companies that are building that world, that's who we're investing in. Yeah.
Robbie, I have been fond of saying, or maybe posturing the question, is BlackRock a Bitcoin company, not a traditional finance company? Like at some point there is this, like you guys are so successful with the product. If it is the most profitable, it is the largest revenue driver. People from the crypto world would be, proud to say, hey, we're a crypto company. Traditional finance is a little bit different, right? You almost want to come at it and be a traditional finance company who is, kind of helping the institutional world adopt this new asset. But when you look forward, I've got to imagine people internally are like, hey, there's new clients, there's new assets, there's new revenue coming from this sector. So how do you guys think about, the evolution of digital asset strategy inside of the company? And is it a thing where you keep building the traditional, side, but digital assets just grows faster and eventually maybe it's, 25% or so of the internal business, or like, how are you guys looking at this?
Well, I think we see ourselves as having the role of a bridge in many respects between traditional finance and the digital asset worlds. That's a bridge in both directions, right? So clearly with the ETFs, for instance, as well as what we did with Aladdin in terms of the technology integration with Coinbase Prime that supported direct crypto trading. But in particular with the ETFs, that was a tremendous bridge helping all of mainstream finance access Bitcoin and then Ether. But there's a bridge in the other direction too, right? If you think of what some of the tokenization is, tokenization of money market fund, for example, that's kind of doing the inverse of what IBIT was, which is take a digital asset underlier and put it in a TradFi wrapper tokenizing, say, a money fund is taking a TradFi underlier and putting it in a digital asset wrapper. And these two worlds, I think, increasingly will converge. Different sets of clients are at different stages of comfort and adoption with each. But over time, there's certainly going to continue to be a greater role for digital assets and this technology theme in general for many of our clients.
Makes sense. And then, Dan, you guys are investing, I know many of the companies you've invested in, they are, I would say, infrastructure related, many of them. And so
we have Figure together, I think, right?
Figure. QuickNode. There's a bunch that we've invested together.
Right.
But what I think is interesting is like the reason why I wanted to talk to both of you together is it does feel like you kind of represent the traditional finance world and creating that bridge. Many of the companies that you're investing in, they're coming from more of a crypto, side of this, but they're building infrastructure that can go back and forth. And so it just feels like these two worlds are getting pulled together, and almost like it will be successful when we stop talking about crypto or decentralized finance and it's just all finance once again, right?
Yeah, I think it is integrating, and it'll integrate via all value moving onto blockchain rails in one form or another. So I think, I think it's happening now. Yeah, I think it's happening now.
What are you guys telling the institutions in terms of allocations, how to think about the asset?
Yeah.
Gold is flying, Bitcoin is not. Are they calling up, Robbie, what the hell, you promised me debasement,
Right,
Bitcoin goes up?
Yeah, so I think that it's a really interesting moment because narratives are so important in this space. And I think the fundamentals of Bitcoin as this global emerging monetary alternative, right, that is scarce, decentralized, digitally native, that exists outside of any one country's political, economic, fiscal, monetary risk factors, that is an incredibly intriguing and important innovation in the world that has, I think, a significant amount of adoption trajectory to come, right? But then you have just a procession of sort of self-inflicted wounds that our space has done. And look at one part of that, obviously, is an incredible amount of leverage and leverage speculation on some of these levered perps platforms in particular. Why someone needs to be 100x long anything, Bitcoin, Dogecoin, I'm not sure. But what it's done is turbocharge the volatility. So Bitcoin's volatility had trending down, down, down. And that's attractive to more conservative allocators. Well, that's actually now come back up because even as it's become more sophisticated, more institutionalized, there's this countervailing force of this growth in levered perpetual futures and the speculation that has now invited. And so these days where you have a tiny little thing that shouldn't have any price impact really at all, and if it does, it should be small, like for example, October 10th, some tariff related thing, and next thing you know, it's down 20%. And that's because you get cascading, liquidations, and auto deleveraging, et cetera. And the reason that's particularly harmful is it undermines the narrative that's the narrative driven by fundamentals of this as a diversifying asset, as a potential long-term hedge against some of the risks that exist elsewhere in a portfolio. The marginal adopter then looks at it and says, oh, I kind of get that it's this global scarce monetary asset, but it's looking really correlated right now and really volatile. It kind of looks like levered NASDAQ. I don't know that I need that in my portfolio, right? So the facts are more on the side of how I characterized it, but now the trading data, at least lately, looks very different. And the bar to adoption, if it trades like levered NASDAQ, is much, much, much higher. There's no good reason that you should think of Bitcoin as a risk-on asset, right? Yes, it's emerging technology, but its fundamentals are so different from all these other assets. But now it starts to become a little bit self-fulfilling. I think on the hedge fund piece, I think there's a misperception out there that it's a bunch of hedge funds in ETFs that are creating volatility and selling. That's not what we're seeing. If you look at IBIT last week, on a week that was tumultuous, obviously, in the Bitcoin market, we had 0.2% of the fund redeem, right? So if there actually were hedge funds that were massively unwinding trades that they were running in the ETF, you would have seen billions out. We saw many billions liquidated on these levered perp platforms. The ETFs have been very steady. It's a much more long-term buy and hold type investor base.
I think the first time we ever talked on the phone was 6 years ago next month. And I called you and I said, this COVID thing seems real. What's going to happen to the dollar? And you gave me a 20-minute masterclass, probably the single best thing that anyone's ever given me, which means you really understand macro. You spend a lot of time in that world. How do you look at macro and Bitcoin? And I think of Bitcoin a decade ago, people couldn't spell macro. Now everyone thinks that they should be the next Fed chairman with their opinions.
Yeah, I thought you were going to bring up our many gold and Bitcoin conversations, because I think
I was trying to get out of this unscathed.
To the dollar, because as you know, I've always been a gold and Bitcoin guy.
Yes,
and I have my physical gold business that I launched in 2009 called GBI, that's obviously thriving now. But let me just tell you, for years that business flatlined, and gold was trading 1,500, 1,800, and I had the debasement thought post 2008. Okay, we're going to have negative real interest rates for a long time. Oh, I'm going to have some physical gold. Hey, why didn't I start my own company? And now we're the third largest vaulter of gold in the world outside of the banking system. And the AUM has exploded. It's been wonderful. But my coming to Bitcoin was through that gold business. We integrated in 2012 with this firm called BitReserve, which today is the Uphold wallet. And still today, you can go on Uphold and buy and sell gold to buy or sell Bitcoin or Ripple. And that was a business we launched with them in 2012. So why mention all this? I think the narrative about Bitcoin as digital gold is very real, is very important. It's not going away. It doesn't matter that gold is up and silver is up in the last 18 months, exponentially, and Bitcoin is down. Over the long term, of course, Bitcoin has dramatically outperformed gold. I have both. I believe that you should have both. I think they serve different roles within a portfolio. A little too complex to get into with only 2 minutes. But the markets always are going to cause the most amount of pain to the greatest number of people, and they're going to, at the moment where the market says, "Oh, Bitcoin is no longer digital gold," then all of a sudden, maybe Besant decides he's going to add a little bit for the reserve, and then it's all of a sudden it is gold again, or whatever it is, whatever the narrative. But the characteristics that we've talked about at this conference over the years in our interviews about sort of the pristine collateral aspect of Bitcoin is still there. And at the core of the whole ecosystem. And in terms of macro moving around, look, I put out a post last week, and I think the Fed Chairman Powell, he's definitely not a criminal. I think the whole Trump attack is really misguided, but he is a very bad Fed chairman. He was
no disrespect,
the worst that I've seen in my life, and I think if you talk to someone like Scott Besant, who's a macro guy like me, who worked for the same guy that I did, and I think quietly he would probably say the same thing, not in a public venue. Kept rates too low for too long, and then overhiked, and then left them too high for doing. And now, it's been clear the employment situation here has been, I call it, quite dire for the last year, and with those revisions yesterday. The rates are just much too high given where the underlying economy is, where employment is, and also what the capital needs are of the country right now. And I think this is another very important part of why we've had this correction in crypto. It's just that, you're having a company come out with a $1.2 trillion IPO. You've got AI, robotics, space, all these other things pulling capital away from crypto. That's okay. But we're feeling it because there isn't enough liquidity out there because policy is too tight. And so I suspect the dollar keeps going down. This is, the Besant's essential policy, even though he won't say it. And I think this is going to be very bullish for us over the medium term, gold and Bitcoin.
I don't necessarily disagree. Rob, maybe the last thing I'll ask you is there's a lot of people in here who are building companies, various technology, various asset managers, et cetera. How are you guys thinking about what you're going to do internally versus what you're going to partner with people externally? And are there specific things that you're looking for from a partnership standpoint, et cetera, with the industry players?
Well, in general, in this space, we have invested in sort of, at the outset, one kind of best-in-class provider in each of the key areas. And so, at the start, that was Coinbase and Circle and Securitize, and Bank of New York certainly has played a significant role as well. And now that's expanding, so we added Anchorage as an additional digital asset service provider. And so we'll continue as our footprint grows to add very selectively and in a targeted way, capabilities providers who are best in class in solving for what we're doing across crypto, stablecoins, tokenization.
Makes sense to me. I appreciate you guys both coming. I always enjoyed talking to both of you, so thank you so much. All right, Tillman from Arch Public is up next. Ready? Ready. You said something to me one time. You said, I like to wake up every day with more Bitcoin than I went to sleep with.
That's right.
There's a lot of people in this room that like that idea.
Yeah.
Where did that come from?
My origins, I started in the Bitcoin space in 2013 as a miner. I fell in love with the fact that I could find a plug somewhere and I could plug in a piece of equipment, and I woke up every day with more Bitcoin than I started with. That simple notion led me to diving headfirst into the industry and really trying to make user interfaces and user adoption easier. I think that's the main drawback right now to the space is it's difficult. And so no matter how attractive an asset class is, if it's difficult and risk laden with risk, a lot of people are going to avoid it. And so as I've been trying to appropriate a similar type of a strategy as the mining endeavor to a fund, where I've found myself is at the point of sale, at the register itself. So the safest way to buy Bitcoin, in my opinion, is not with debt, and it's with after-tax dollars. It's once you've made the money and you've paid your taxes, it's time to appropriate that income into a safe savings vehicle of some kind. Bitcoin, in my opinion, is that vehicle. It's the best asymmetric upside opportunity that you can get. And so we started to put together this notion of like, if we can't mine effectively at scale now, how can we accumulate Bitcoin at scale? And you look at some of the pioneers in the space like Stake and Shake. Stake and Shake is doing a great job because they're doing it very simply on the back of earned income. I think one of the things that's unique about...
Describe what they're doing. Most people don't know.
Okay. Steak and Shake is a fast food chain. They serve hamburgers. And they have adopted Bitcoin at a scale that no other fast food chain has. They're giving employees Bitcoin as part of their benefits package. They're taking revenue that they're earning at the register, and they're buying Bitcoin with that. And they're doing it in a way that I think is bulletproof from a risk perspective if Bitcoin continues to do what we believe Bitcoin will do. So if you take their model and you appropriate it across the middle class of America, the entrepreneurs, the small businesses, and you say, okay, how is the wealth gap is widening? How do we supply that sector with a savings mechanism that preserves their purchasing power and allows them more flexibility in the future when they face difficult times or downturns? And you look at America, you look at all the companies that have been very successful that have now found themselves in an extinction event. And there's no way for them to recreate themselves or reinvent themselves because they don't have the liquidity. They haven't put their money to work in a place that allows them to do so. Michael Saylor, obviously very effective in doing that. I think a lot of people are attracted to digital treasury companies, and I think they're attracted because they want Bitcoin exposure. But I do believe, including myself, that I don't have a full understanding of how those markets work. It's very complicated, and they're tools that can be used for hedging purposes. But for accumulation purposes, I believe there's a better way to do it. And so incremental purchases of Bitcoin on the back of retail sales, I think, is going to be the future. And I think that when you get that type of a purchasing model, you get a very healthy cost curve, and you're never beholden to any price. And as long as you continue to earn revenue, you're not diluting previous shareholders. There's really no downside. And you're never a forced seller. That's really what it ultimately comes down to, is like, if you've borrowed money to buy Bitcoin and or you've misappropriated capital or over-allocated capital, you're going to find yourself during times like this with a lot of heartburn. And you look at our industry right now, and a lot of people are upset with the price of Bitcoin. I find that comical, honestly. I think it's proven itself over a 17-year period to have resilience unlike any other asset we've ever seen. And so when you have dips, when you have these major liquidity events where people are going to cash and there's trillions of dollars sitting on the sideline, you ask yourself the question, like, what's changed? Has the network changed at all? Has the protocol changed at all? No, it hasn't. Is Wall Street adopting it at a rate that they have never adopted it before? Yes. Larry Fink and the likes of him are building infrastructure plays that take 5 years to even get up to the market. They're not doing that for the short term. And so I look at opportunities like we are sitting in right now, and I think the major difference between this conference and every other conference I've attended is there's a lot of dry powder in this room. And dry powder loves dips. And that's what our software at Arch Public's about allocating capital in a more prudent way, whereby which there's not emotion attached to it, and that you're not relying on your availability to make those trades. It's a misconception in the market, I think, by a lot of people. They hear these pundits saying, yield farm, volatility is the greatest feature of Bitcoin. And then you ask them, well, what are you doing to take advantage of it? And they don't have an answer. They don't even know what that looks like. And so if you find yourself in that boat and you find yourself holding Bitcoin for long periods of time and you're riding the roller coaster of the price, there's a way to capitalize on that roller coaster ride. And so a case in point of this is, like, last year, you would have had a negative outcome in holding Bitcoin, buy and hold, but you had a plus 22% outcome trading the volatility or harvesting the volatility.
What does that mean, though, when you say trading the volatility?
Yeah, well, so the way that we've structured it is very user-driven. You can download our software and create if-then scenarios. If Bitcoin drops by this much, I want to allocate this much capital into it. And you can conversely create if-then scenarios on the upside. And so what that allows you to do is, anytime the price is moving, if it's triggering one of those if-then scenarios, you are making money, because you have... The protocol doesn't allow you, if you click the box, to sell at a loss. It's only in profit. So you're essentially just setting price points along that curve that then, when the volatility goes to your advantage and moves in the right direction, you're able to systematically take profits off the table. So you don't have to take all the profits off the table. If you do want to yield farm and you want to do a 1-for-1, you could do a 1-for-1. You could put in $500 every trade, take out $500 every trade, and then you would capture the delta, the price movement. If you have a bull bias and you're a corporation that wants to add Bitcoin to their balance sheet and they want 5% allocation, we can set up strategies that will be very customized to your individual circumstance, but that will steadily increase your allocation and find opportunities when the market presents them to buy. And as you buy, it's very similar to a covered call strategy. If you are buying on the dips and you're buying when the market has a dip against the VWAP, for example, that's a very good time to add to your long-term bag. That's buying the dips, right? Very appropriately. That doesn't mean that if you have the same opportunity to the upside, that you don't take advantage in a sell situation. A lot of our customers will say, well, I want to have 5% allocation. Well, that means you really need to have about 4% allocation at any given point in time, because the opportunity that Bitcoin provides you during times like this is the opportunity. That is how you take advantage of it, is you don't put all of your eggs in one basket at one price. You dollar cost average in a very systematic way. And so if you just look at volatility in any market and how do you cure the risk attached to it, it's always DCAing, right? But then you have a broader question of like Tuesday at 9 a.m., is that the best time to buy? Or are you going to wait for the market conditions to present themselves?
Well, this is important. So I think there's two aspects of what you guys do that, and I think I've told you guys this before. You know how many times somebody came to me and was like, I have trading software. I've shut my ears off and snooze, right? Like I could care less. I don't like trading. I don't like any of this stuff. What I find interesting about what you guys are doing is you basically are giving people tools to simply say, if I'm not at my computer screen, execute this when these conditions are met.
That's right.
Right? So it's like, when I was younger, I stared at this thing all day. I had 99% of my net worth in that thing. I wanted to know every tick, right? At some point, though, you get a life, and you touch grass, I think, as the kids say, and you're like, hey, I got to go outside, I got to do other things, and so you can just say, hey, if Bitcoin drops to a certain level, buy, okay, easy, right, limit order type stuff. But then it's like, hey, if these two things are true, then do this. So that automation really puts the power, I think, in individuals' hands, especially if they're busy or they've got other stuff going on. But the second thing is you don't require people to send the Bitcoin from their account to you.
We do not custody funds.
So explain this part, because to me, this was the thing that anyone I've ever talked to that had some sort of trading software, whatever nonsense they were doing, it always required, give me your Bitcoin and I've got a fund, I've got this platform, I've got, something where you no longer have control over the Bitcoin.
Yes, that was critical to our company's existence. The first 5 years, we've been in business for 5 years. The first 3 years were really education around us not being a Forex bot company. That's really what the big hurdle was, because in everyone's mind, that's what automation is. But then you go into the traditional finance space, and I know a lot of really big traders, and they all use automation. I mean, you can't be at your computer all the time. You have a guy like Jeff Park. He's as smart as anybody I've come across in the space. You want his will to be represented in software that sits there and exercises his will anytime the market conditions allow it to be exercised. And so Jeff doesn't have the ability to sit there 24/7. He's got to sleep, he's got family, all that stuff. User-driven software automation allows you to create a custom set of code that's specific to your situation, and it's so clear as to what the outcome is going to be that you can put the purchasing schedule in front of a board and have them vote on it. So it removes the individual liability of some person in the office going, oh, today's a good day to buy Bitcoin. How much should we buy? When should we buy? What exchange? All of that's taken care of now. It's completely automated. And so you come up with a strategy that you're comfortable with based upon all the risk parameters that you want to adhere to. And then you set that in motion, and it's done. The emotions out of it, the time constraints are out of it. You look back at the time frame that you've deployed the strategy, and you've achieved exactly what you wanted to achieve. If you want to have an allocation of 5% in your company over the next year, we can build custom strategies that will take advantage of the volatility of the market and giving you 5% allocation in Bitcoin. It's just that simple. So if your goal is to acquire Bitcoin, there is no downside.
The other thing that, so I hear all this, great. I don't know how to set it up. I don't know what it is. It seems like you guys spend a lot of time talking to the users in terms of, hey, here's what everyone else, like almost like benchmarking, right? It's like, hey, here's what other people are doing that is working. And what's interesting is these are companies. And I don't know about you guys, how many people in here buy more Bitcoin on any periodic basis than just a one-time purchase? Most people, right? And one of the funny things that when I first got into the whole institutional world, I asked Mark Yusko. I asked him, I said, he'd been an LP in all of the best fund managers, right? He knew Julian Robertson, he knew Howard Marks, he had all these funds. And I said to him, what separates the top 3 people from the top 1%? And without hesitation, he said to me, they press their winners harder than anyone, and they cut their losers faster than anyone. And that thing just seared in my brain. And so if you think about actually one of the biggest risks for Bitcoiners, how many of you in here now own a certain amount of Bitcoin, and you are buying at a slower pace than you were when you first started? Probably a lot of people raising their hand. Usually people don't even want to raise their hand saying that, right? But what ends up happening is they stop pressing their winners, right? They stop pressing the gas. And so how do you keep doing that? You mentioned the food chain. go make more money, and then you just keep putting the allocation. And I think that's where like you guys have been really helpful for a lot of people of just saying, look, this is the kind of the way to systematize this.
Well, and that's a luxury, right? A lot of people don't have a lot of cash flow coming in. And so if you are stuck with a fixed amount that you want to place, you still have the same benefits with the software and the fact that you place it incrementally. Again, anytime you place capital, the more you place, the more risk you incur. Period. The end. That's a rule. So if you're looking at an allocation of 5%, what should your incremental purchases be? Should it be 0.5%? Should it be 1%? How large of what's the time frame that you're working with? All of those things are just very difficult for corporations to get their arms around until they have something that they can literally lay it out and see it. And they can say, does this fit our objectives? So the risk is the same from a corporate side for a user. We have a highly volatile asset. We keep saying that as a feature and not a downside to it. And yet we have to address how do you de-risk that feature? A volatility can cut both ways, right? It's a two-edged sword.
Where do people go to find this?
Archpublic.com is the best place to go to find the software. You can download it for free. You can use it absolutely no cost whatsoever. We want you to be sold before we ever call you. Our sales team is extraordinary. They really want to understand your individual circumstance and how we can best serve you and educate you on how to use the software. So call us, get plugged in, completely no risk. We'll get you up and going. And once you have seen what the software can deliver, we're confident that you're going to come back and want to join the concierge program, which is kind of our higher net worth program.
Did you give away the alcohol yet?
I don't know if we have given away the alcohol, but I did forget. We need to talk about the fund.
Oh, go ahead.
So we kept getting questions around the lines of, if your software is so good, why aren't you a fund? Why aren't you using it for your own purposes? And so we did start a fund, and it's it's very different than all the other funds out there in the fact that we're practicing what we preach. We are going into quick service restaurants, highly scalable franchise models where cash flow is king. Cash is coming in very quickly with very little capital outlay. We're focusing on using the $50 million of the $250 million fund will go into Bitcoin immediately. That's our asymmetric upside opportunity in the event that Bitcoin goes to $1 million in the next year and a half. We'll outperform every real estate fund with that 20% allocation. If Bitcoin continues to move sideways or down, our purchasing power in the $200 million that we will be placing in real estate and small businesses is going to be coming back to us in cash flow. 50% net operating income of all the businesses that we're partnering with is coming back to the fund to buy Bitcoin every single month. So it's a natural way on the back of the point of sale transactions to dollar cost average into Bitcoin. And on top of that, we'll be using our software to allocate those funds more appropriately based upon the individual, purchasing opportunities and the dips that present themselves in the market. So very unique fund. It's not something that is like the treasury companies on Wall Street right now as it pertains to there's no debt. We are not borrowing money, and we are not issuing convertible notes of any kind. Just very simple real estate fund, tax advantaged on the front end, gives you tax-free growth opportunities in Bitcoin. And then we believe that the cash flow that can be generated on the back of real estate provides a very healthy balance of upside, but also risk-adverse returns. So that's basically what we're doing, and we're using our software very effectively to enter that money into the market, both from a revenue perspective, the net operating income, but also the 20% initial placement.
Tillman Holloway, everybody.
Thank you, guys.
All right, before Grant Cardone comes up here, wait, just stop, freeze. No, you stop, Grant. Hold on a second. We're doing a giveaway. You know about giveaways? Look, oh my God, Jesus Christ. That's not the giveaway. All right, I guess he's gonna bring you guys candy. Can we pull this thing up? Where's this golf thing? All right, so Clear Street is an investment bank that we have worked with. They are giving away tickets to the Cognizant Classic. You just gotta scan that QR code and you get to go to this tournament. Where is it? It's Palm Beach Gardens? Yeah, there you go. So if you want to go, potentially, they're going to give away free tickets to this thing. It's February 27th, so if you got plans, you got to change your plans. But If you go ahead and scan that QR code, we'll leave it up there for a minute or two, and then you can enter and get it. I like the Clear Street guys. They helped me raise $750 million, so they're good at their jobs. But also, we like when they do giveaways like this. All right, Grant, come on, Candy Man. Do you have a microphone? Okay.
I feel like this is like some kind of comedy act.
Yeah, it's like a Tonight Show, you know. But it's like today with Grant and Pomp. Let's talk about real estate.
Okay.
And Bitcoin. You have what, $5 billion of real estate?
Yeah, 5.3 billion.
Who's counting?
I am.
Yeah, I know. And how much cash flow do you get off of that?
We have the NOI on that asset class. Let's see, we got $2.2 billion worth of debt that's fixed on all but 3 deals at around sub 5 across the portfolio. Man, it's hot in here. Is it warm in here? My God.
Can you guys lower the
I feel like
heat,
I'm in
please?
Miami. And, you know, we probably got an NOI on that portfolio of $240 million.
All right. So let's say you get $240 million. You were just taking that cash, and then you were getting a bunch of cash from all your other businesses. I don't think people realize how big the Grant Cardone empire is. What numbers can you share with us?
We'll do almost $1 billion of revenue this year.
Across all the companies?
Yeah. There's an education company that's about $150 in revenue, $40 million in net. We have a 10X health company that's only 4.5 years old. We'll take that public in the next 24 to 30 months. That's probably worth $2 or $3 billion. It does. We got 250,000 customers. Started with 60 customers. I took it, renamed it, branded it, blew the guy up online, used my social media following, and we went from 60 customers to 255,000 customers on supplements and biohacking stuff. We have a consulting company that does about 180 a year and growing. It's a great business that started 4 years ago. It'll net 40 or 50 million. And then we have Cardone Capital that raises money. We've raised $2 billion for our real estate transactions. So combined, you know, they all fit together. They're not really different businesses. If I can touch on one, and it'll benefit the other ones. They're all privately held. We kind of do what we want to do. We're renegades. We're looking for ways to disrupt spaces that are cash flow positive. And so when we started playing with Bitcoin and adding it to our real estate last year, we did our first deal was $85 million. Our second big deal was $230 million.
Hold on, go back to the first one for a second. People don't know what you're doing with the Bitcoin. So you've got a real estate asset, and you buy some Bitcoin.
So did they send did they pop that little?
I don't know. If you guys got something, pull it up. If not, just talk.
Yeah.
They're not going to be able to see your phone.
Oh, they can't see it? No, I know they're not going to be able to see my phone. Thank you, man. I've been in front of more people than you have. I'm just saying, you know. I wasn't in the Epstein files either.
We were in the back, and 3 of the 6 people were in the Epstein files, but none of them for bad reasons. So everyone was trying to figure out who were the 3.
Well, some chick came out and said that if you're not in them, you're not even cool. So I was invited to a Diddy party, though. Were you?
Did you go?
No, I did not go. Right. Yeah. So what we did was look. I'm a real estate investor. I'm a very conservative investor. I cash flow my companies. We don't take a lot of risk. I own no stock. I've never done a call. I've never done a margin, even though the internet says I had to sell my plane because I'm doing margins in Bitcoin. It's not true, but and I'm extremely conservative. So I was given my first Bitcoin in 2013. I was given 115 pieces. I didn't know what it was. I said, look, is this going to make me sick? Is there something bad going to happen? The only way they could pay me for this event was in Bitcoin. So I said, look, I'll take it. You know, I don't know what it is. I took the 115 pieces, still have them today. So it was probably the best speaking gig I've ever done, about $11 million. Maybe not, maybe $7 million now because of whatever's going on. And then I started playing with it because I didn't read the white book,
white paper,
the white paper, or the Bitcoin Standard. I didn't know who Michael Saylor was, and so I just took it and watched it. And then I started playing with it. Every once in a while, I'd buy some, or buy a piece. And And then last year, I said, what if I could start combining real estate and Bitcoin together? Because I was on a debate. You might have been on that debate on Space.
I remember.
It was what's better, Bitcoin, real estate, or
gold?
Gold. And I said, well, I don't think it was gold, actually. I think it was something else. Anyway. And so last year, we bought a $230 million asset from Blackstone. It was $130 million below replacement cost. Instead of stealing the real estate, simply stealing the real estate, we said, hey, we bought discounted real estate. And a discount is invisible. There's really no value in a discount except that it's a lower price. You had a lower entry. But when you sell it, all you're going to do is make the difference, between what you stole it at and what the market value is. Well, instead of just taking the discount, I already have $5 billion worth of real estate. We just stacked $100 million of Bitcoin on top of it, and I'm still cash flow positive, and I'm still below replacement costs. Now, the benefit of that is that when I go sell my real estate off, or I sell the Bitcoin off, I still have one of the other assets. So we did this. I brought it to my audience. I said, look, I just bought an asset that was $230 million. It should have sold for $350 or $360. I stacked $100 million on top. Now I'm at $330. I'm going to get a loan for about $130 million, so I need to raise $200 million. I funded it off my balance sheet. I've been doing this for 6 years now. I buy it, and then I tell my audience, I fund it on my balance sheet, and then we backfill it. I introduced it to my audience. These are not Bitcoiners. These people do not know what Bitcoin is. They don't know who Michael Saylor is. They don't know this dude, okay? They're not in this event. They don't even know this event's coming here. They don't know what a coin or a token is. And I had 1,500 people invest with me that have never invested in Bitcoin. They invested because the two were together. I had half the audience did not invest with me in real estate, and they've been watching me for 20 years. But because I put the two together, it became a more attractive investment for them.
Now, when you do this, one of the things I think is interesting is you made an initial purchase of Bitcoin, plus you got the real estate. Yep. But then when you're getting the cash flow, you're also taking some of the cash flow and buy Bitcoin.
Yeah, we have the asset has to be below replacement cost and it has to still be cash flow positive. So that's our criteria. So with that cash flow, I'm either going to fund projects, CapEx, furniture, or I'm going to buy more Bitcoin, depending on what's going on. So,
and then you keep stacking the Bitcoin. When do you decide to sell real estate? Do you ever sell?
Well, I try not to sell. I hate selling anything. Like, middle class people sell stuff. But if you want to get wealthy, if you study wealthy people, they just never sell their shit ever. They refinance it. So what I would hope to do. We refinanced 2 deals last year that we had bought 9 years ago. The average return, we still own these assets. The average return after this finance for the investors has been 47% a year for 9 years without the Bitcoin. So that's what we want to do with the real estate. We want to wait 7 or 8 years, wait for rents to grow. All I need is a $25 rent bump every year. I don't need $250 or $500. I need $25 across 15,000 units. $25 gets me 80 million in new values. It's a nice gradual thing. And then I put this volatile, crazy, whatever this Bitcoin thing is, this new technology of money, combine this old asset, this since the beginning of time, real estate. People understand real estate. This many people understand Bitcoin. Almost everyone understands real estate. And you combine those two together and I get that volatility, but the stability, combine it with the stability, we think we have a great investment.
Do you buy any real estate property today without the Bitcoin as a component? No. So pretty much you have...
Now, my guy back here that works with me, he's trying to talk me into it right now because some of our investors just want the cash flow. But I don't want to do that anymore. I don't think I ever buy real estate again without adding Bitcoin to it.
And what has been the downside of adding the Bitcoin? Maybe there's a few.
Well, I can tell you, we didn't know what was going to happen when it falls from 126 down to 65. How many phone calls am I going to get? I have 0 phone calls in 3 weeks. Because again, they're not Bitcoiners. They're not looking at the price every day the way you guys do. Y'all get all freaked out and start tripping, looking at it every 3 minutes, addicted to your phones. You got like, oh, goddamn, what am I going to do? You're going to buy more. That's what you're going to do unless you're broke. And if you're broke, then you don't understand the value of Bitcoin. The value game for me is, man, go hustle the fiat. Go hustle fiat from all your businesses. Hustle as much fiat as you can. Be cash flow positive. Convert your fiat to something better. As fast as you can. Convert it to something, a shovel, anything. Convert it to anything. An education, an automobile, something that'll get you transportation. Anything is better than cash. So that's what I've been doing for years. I'm just trying to convert other people's money. They bought a product from me. That's other people's money. I gave them my product. They gave me cash. I take cash. I go convert it to concrete or glass or steel or rental income, or in this case, Bitcoin.
When you think of the other...
Peter Schiff thinks I should do real estate and gold.
You
and I'm like,
should.
no, I would never do that, dude. It's stupid.
Why?
They're too similar. Why would you put two like things together? You don't get a superpower like that. Okay, the real estate's heavy, the gold's heavy. Okay, I would personally never buy gold. I'm 67 years old, and I have never bought a piece of gold in my life. Most importantly, no one's ever offered me a piece of gold, ever. I've been offered more Bitcoin for products in my lifetime than I have gold.
What about your other businesses? Are you converting cash flow into Bitcoin?
Yeah, we actually have some cash flow from those businesses that are buying Bitcoin.
Yeah, how many Bitcoin you got?
2,000, just over 2,000.
2,000?
Yeah.
I thought you were...
Most of it...
You're like the only person crazy enough to come up here and actually say it. Okay. I haven't asked
I think this is a problem in this space that you guys don't tell people what you own, okay? It's a massive problem. I don't get it. Michael Saylor will tell you what he bought. It's going to be public. Like if you're going to be a big boy, you're going to be public and it's going to be transparent. I'll tell you how many I own. I'll tell you what my price was. I'll tell you when I bought it. And the people that aren't willing to do that, I just challenge the credibility of this space and the conviction that you have. It's easy to hear you guys say, man, I bought it in 2012. Okay, yeah, good. How many did you buy? How many did you buy? I can't tell you that. Why not? Like, well, I don't want you to know I have money, bro. Like, what are you talking about? Come on, this is crazy.
So what are the other businesses that are buying Bitcoin?
Our health company does, our education company does, and the consult. All of them do.
Now, I read online...
Or I could send in cash.
Well, I read online that you want to take some of your companies public.
Yeah.
Well, you were saying it online.
Yeah, we will.
Yeah. So, like, explain kind of what your thought process is. You got this great thing, all this cash flow, private market. You got Bitcoin. What is the...
Yeah, the real estate Bitcoin will... There's a... When we started playing with this, I discovered, after coming up here and talking to the banks, that the REITs, there's a REIT industry, real estate investment trust, for the audience. There's 190 REITs. They're underperforming, and they can never hold any currency, on their balance sheet. They have to distribute 90% of their money. So we basically stumbled into a glitch. There's a glitch in the universe where the real estate investment trust, they have $4.5 trillion worth of real estate, can never, ever own Bitcoin. Starwood, Blackstone, I mean, all of them, none of them. The insurance companies that own a majority of the commercial real estate in America is owned by New York Life, the MetLifes. People don't even know that. Can never, ever have Bitcoin on their financial statement. The syndicators, people like me, I'm considered a syndicator in real estate, okay? Most of them are having trouble raising money for their real estate projects, much less the real estate and the Bitcoin. So by me raising money for institutional, best in class. I mean, this is as good a real estate you can buy. We just bought this monster deal in Boca Raton from Blackstone, out of bankruptcy. When we start stacking those together, and all those properties now are branded Bitcoin properties called 10X brand. It's a brand that we have, and we have the combination of the real estate and the Bitcoin. We think we create a new vehicle, a new financial instrument.
So you think you can take the real estate and the Bitcoin and put it in a REIT structure?
Yeah, it won't be a REIT structure because the REITs are required. REITs have not changed since 1965. They were created for a real estate hack, for a tax hack. And they haven't changed in 65 years. So I think I'm going to be able to exploit and disrupt the real estate investment trust industry.
And do you want to take your other businesses public as well, or just the real estate side?
Well, we'll probably take the health company. The health company would be the next one to possibly go public.
And what does that one do?
It's the regenerative, stay young forever.
Yeah, but what are they? They're selling like
supplements
and stuff.
Supplements.
Yeah. All right. And then you now have gone from knowing nothing.
Live forever, look better.
Like you.
And you look.
Yeah, no, look like you.
Look better, look beautiful.
Yeah.
Like Scaramucci that you're going to bring up here.
Well, he's a whole other thing.
He's looking good,
Scaramucci
isn't he?
comes out here. I mean, that guy is just, he hasn't aged since he was 18 years old.
Yeah.
When you look at your kind of trajectory in the Bitcoin world, you now have very quickly, you've talked with Saylor, you've talked with a lot of different companies, you've talked with the bankers, like you've gotten very quickly up to speed. What do you think the areas, as an outsider coming in, what are the areas that the Bitcoin industry should address that you think would make it either more attractive to people like you or to your type of investor base?
Yeah, I think, look, in real estate, we always say the outsiders make the market, right? Like new people come into a market and they make that market. The people that lived in Scottsdale, Arizona didn't make the Scottsdale market, okay? The people that came in from California made that market. So New Yorkers are making Miami now, like Chicago's making Miami. Miami didn't make Miami. Outsiders make new markets, okay? So a guy like me comes along, not paying attention to what you guys are doing, and boom, the next thing you know, I see the thing different than you see it. You see all these dips, it's 7 years, some bullshit 4-year cycle that y'all talk about obsessively that nobody can explain to me.
Well, every 4 years it goes down.
Whatever. I'm like, dude, I ain't in it for 4 years. So I think that the Bitcoiners, y'all need to learn how to talk to people different. A third of the audience is, U.S. dollars going to zero, and this is going to replace money, and the dollar is going to go away. I'm like, I don't want to hear all that shit. It's all depressing to me.
So what do you want to hear?
And Bitcoin's going to solve every problem in the world, and there'll be no pedophilia because of Bitcoin and water problem. I'm like, fucking, dude, I just want a good investment. Like, I can't deal with all these other problems that you're dealing with. I'm simply trying to convert my hard work to a good investment that I can pass on to the next generation. That's all I care about. The rest of this stuff is crazy making to me. So what do I want to hear about? I just want to hear everything's going to be all right. And talk to me about the things I understand and agree with, okay? Like I hear people in these spaces talk about how Bitcoin's going to replace all the real estate, okay? And it's like, yeah, no, dude, I still need a place to live. I got people online telling me I should get rid of $5 billion worth of real estate that took me 20 years to accumulate. You should get rid of all of it and all the other companies you own, and you should only own Bitcoin. I'm like, fuck, you're fucking crazy. So
if you did that, you would have lost 50% in the last couple of months. It'd been awesome. You imagine the content.
I'd be wrecked, dude. I'd be mentally wrecked. Now, if I would have converted all my cash flow, just my free cash flow from my real estate for the past 12 years, when I got my first Bitcoin, I was distributed about $1.6 million. See, I don't mind telling people what I was distributed. Let's say it was $1.6 million a month, every month for the last 144 months, whatever that number is. Let's just take $1 million for simple math. That would have been $144 million, which I had it in my hand. Half of it was not taxed because the first 5 or 6 years is not taxed. And if I would have just converted that cash flow into Bitcoin, it'd be worth $40 billion today, even with the pullback. And I'd be one of the richest men in the world. Instead, I'm up here in a fucking hot room, talking to a bunch of people I may never see again, and with you.
Yeah, well, I'll make it.
And I did this as a favor because this guy's done it twice for me. And by the way, you were one of the best speakers that we had at both of our events, so I really appreciate
you. It's funny, all that shit he said about, how he said the Bitcoiners are talking about the dollars going to zero and all that shit. I went to his event and said every single one of those things to his audience. They were looking at me like I was crazy. They were like, oh, my God. All right, last thing is you said you own no stocks.
Yeah.
So
I own 3 stocks, and they're all relationship investments.
Okay.
They have nothing to do with the stock.
Okay, so but why not any stocks?
I'm not a paper guy. I got a piece of paper. I'm like, why would I go sideways and convert to another piece of paper? I want to convert to something better than paper. I've always been like this. I've been doing this 37 years. Get a piece of paper for somebody, take paper, convert to something better. And in the beginning, it had to cash flow. If it didn't cash flow, I wouldn't do it because I needed a second drip because I didn't think I would last this long. Okay, I was 30 years old selling shit. And I'm like, there's no way people are going to keep buying shit from me. Like, how many
No,
times
he
can I do
literally-
this before people are like, no, we're not going to buy anything from you again? But I grew up poor. So I grew up in raised by a single mom, and, you're just waiting for the wheels to fall off all the time. Like, my dad died when I was 10, my older brother died when I was 20. And when you're brought up and you have these losses, then you're like, the wheels are going to fall off again. I was brought up by a woman that was raised during the 1920s. So she had this 1932 depression mentality, food lines, the whole deal. And so the psychology of how you're brought up affects how you invest. And that could be good and it could be bad.
My last question for you is, you've gone into very diverse businesses. How do you decide what's the next business you go into?
Well, look, I only invest in stuff I understand. It takes me a long time to get my head wrapped around. If I won't eat the dog food, I will not present the dog food. So all the companies that I have, I actually use the products, I use the services. I've been offered a lot of stuff from a lot of people because I got about 20 million followers online, and people, hey, how about you promote this? I'm like, no, bro, I never promote that.
What's an example of something?
Cannabis. I'm like, no, I ain't smoking weed. I'm not promoting weed to anybody. Okay, like, I'll promote my competition to smoke weed. Here, have some. Okay, and I know people that smoke weed, but I'm telling you, you cannot compete with somebody if you have two equal IQs and two equally ambitious people. Okay, two artists, because this is always the defense to the cannabis people. Oh yeah, it makes me more creative. Okay, you put two artists, one that's smoking and one that's not. I guarantee the guy that's not will smoke the guy that smokes.
Epstein, cannabis, Bitcoin, real estate. I mean, where else can we go? Grant Cardone, everyone.
Keep it up.
All right, Dan Ives is next. Grant. He said he had more people on his phone. I got his fucking phone now. All right, Dan Ives. This afternoon session is just like a freaking hangout. All right, Dan. AI. I read online that the stock market's over. They just said, hey, software's over. You've been a bull. You're wrong. What do you think?
I mean, first, I didn't realize it was Johnny Carson Pomp here. This is actually...
It's kind of fun, right?
It's kind of fun. I like it.
Yeah. I mean, I'm not as fashionable as you.
I like, look, in my view, it's year 3 of an 8 to 10 year build out in AI. To some extent, if you look at earnings, the CapEx numbers, 650 to 700 billion for this year, it further validates our view that this is going to be a fourth industrial revolution. Now, in terms of what's going on here, the view that software is on the outside, it's a structurally dead sector. I think, in my opinion, in my career, I think it's the most misguided, disconnected call that I've ever seen in tech. Because ultimately, Salesforce, ServiceNow, Oracle, Microsoft, they're going to be the hearts and lungs of the AI revolution. And the use cases, are they happening today outside of Palantir? No. 6 months, 9 months, 12 months, 18, that's where it's going to happen. So I think what you're seeing here is essentially a DeepSeek moment. And I think tech stocks are going to be up. Like I've said, I think tech stocks are going to have another 20% year up. And this is just early days of what's going to be, I think, a bull cycle that continues to play out.
Why do you think so many people want to see these American software companies fail? It's like every time that there is a potential excuse, they all start selling, they all start saying it's over. Like, is it just that, pessimists sound smart and everyone wants to sound smart?
Look, haters hate, right? I mean, like I've seen in my whole career, right? Like they always are trying to wait for there's another bubble moment, there's another .com, there's another financial crisis. I think all the reality is to say this is a bubble from the 30th floor of a New York City office building or Metro North, it's easy to say that. The reality is, as someone that spends so much time in Asia, sees it up front, sees demand to supply 12 to 1 for NVIDIA chips, is the exact opposite. And so, like, so much of my career, I'll be in like Taiwan in a fab 18 hours a day watching them build, and then all of a sudden, you land in Newark Airport, there's a fist fight at Dunkin' Donuts. And you're like, there's a reason why US is so far behind. Now, for the first time in 30 years, the US is ahead of China when it comes to tech. There's one chip in the world fueling the AI revolution. It's led by Godfather of AI, Jensen. You look at the hyperscalers, you look what Palantir's done, Mongo's done. Like, the reality is that Huawei, China, they'll narrow the gap a bit, but US is years ahead of everyone else in the world when it comes to tech. And that's why, in my view, you want to invest in US tech stocks now. So I don't, like days like, if I look over the last week, the amount of panic and white knuckles that we see is very high. But for someone like myself, I view that more as opportunities because I see where the demand is. You have 3% of US companies that have gone down the AI path. You have more data centers under construction today than active data centers. Europe, 0. Middle East just started. Asia, ex-China, less than 1%. So I'll take that bet, as well as also it's the multiplier. For every dollar spent on a NVIDIA chip, it's an $8 to $10 multiplier across the rest of tech. And that speaks to my view, like, to call this a bubble, to say that this is one where, you know, this is the end of the road, it's the opposite. This is not, like I've said, this is not like a 1999, 2000 moment. It's a 1996 type moment relative to where we are in the cycle.
Now, the other thing that I think is really interesting is we get these drawdowns. They happen every year, but somehow we have like amnesia. We forget that they happen, you know, on the intra-year basis. But you're calling for a 20%, you know, 2026 tech stock return. What do you think the broader S&P would do in that environment?
I mean, look, I think like I'll argue that it's actually spreading because financials, healthcare, industrials, the ripple effect from tech is going to be broad around the whole market. So you could argue like S&P is going to be up same, or you could argue maybe even it's higher to some extent relative to the ripple effect. That's why this is a DeepSeek moment that we're going through over this last week. And I just think where every year you're going to have 4 or 5 times to have these opportunities to own tech. And I think we sit here 6 months, 9 months, 12 months, looked at this as an opportunity, especially when you look what's happened in software. I think that is a very good case study to what's happening here, is that the fact that they're basically taking down the software sector, thinking that it's a structurally declining and, you know, some of these names are essentially going to go away. Talk to any CTO, CSO, CIO about the concept of that with a Salesforce, ServiceNow, a Workday, you know, so many of those other. I'm not saying it's not a headwind, and there's not some names that are disintermediated, and there's not pure play names that are definitely structural, you know, on the wrong side of this. But what's happening here, you're putting the whole sector in one, and I think that's the wrong trade here.
When you think about AI and Bitcoin, are these two things tied together? And if the Bitcoin market sells off, then of course AI was going to sell off, or vice versa? Or are they just separate things that happen to go in the same direction sometimes?
I mean, my own view is that they are connected in the fact like you are seeing like a risk off trade. I don't think it's coincidental. If you look what's happened in Bitcoin, what's happened in tech, I think there's obviously different things driving them. But I think when you see crypto selling off the way it has, it does have an effect on tech investors. It's a risk-off trade that you see playing out. And then you can make the argument, especially when you think about blockchain, utilities, and everything where it's going, if it makes you more negative on the AI trade, you can make parallels to ultimately what that's going to mean for crypto. Look, it's my view. We sit here, we're in a 4th industrial revolution. We just happen to be living in it. I'm not saying you're not going to have these bumps in the road like we always have, but I sit here today and think we are still in the first third of the cycle. And I think if you go back like a year ago, go back to last January during DeepSeek. Go back to last April, May, Liberation Day. I'm just saying it's very easy to forget where we are, but I just think look at demand, look at CapEx. If you follow the CapEx dollars, that's the difference. And I think a lot of times, as someone like covered tech back in like the bubble and burst, the big parallels, compare Cisco could be an NVIDIA, but I go back to like back then, the average tech company was trading at 30 times revenues, now it's 24 times earnings. Back then, companies were supported by basically Series A to Z, upside down business models, weren't profitable. The use cases basically were all PowerPoint presentations in terms of what could happen. Now it's big tech, 650 or 700 billion. These companies have better balance sheet than most countries. You're seeing the use cases play out. They don't have to go to the debt. You can say like Oracle's going to debt market and they'll go to the debt market, but they don't need to ultimately as an overall sector. And I think it just speaks to the early days. And I think that the parallels, if you have an 8-year-old, they're not going to need a driver's license today. When you think about where everything's heading, autonomous, robotics, I'm just not like a dystopian view where this is negative. I actually just view it as it's the start of what's going to be a fourth industrial revolution that's playing out in front of us.
Elon wants to put data centers in space because he's saying that the regulation is too constricting. We don't have enough power. Data centers take too long. You know, all of the reasons he's giving. Forget for a second whether he can be successful or not doing that. The things he's highlighting do seem to be constraints. Yeah. And so how do you think about kind of the AI, bull run, if you will, with these potential limitations in front of it?
It's my view SpaceX and Tesla are going to merge. Now, I'm like, obviously XAI and SpaceX merge, but ultimately that is the path. And I feel very strongly that is the path because for Musk, the goal is to have all of that under one hood in terms of a broader vision. And I think that's something where when you look at Karp, at Palantir, and you look at Musk, and you look at Jensen and other, they're able to see around corners that others can't. And I just think that's the right play. And it's something where Tesla is a great example where those that called an auto company 10 years ago, right? Like they never understood they never believed in the vision. I do believe part of it is like you have to be an optimist, you have to be a technologist to understand where this is going. And I think Musk this is the year for Tesla where it's all going to start to take shape. And like I've said, in terms of autonomous, Optimus, I mean, Tesla is going to be less about cars and much more what I view as a true AI name.
When you look at robotics in particular, one of the things that I keep thinking about is Amazon employs 1.5 million humans, 1 million robots. They're openly saying that is likely going to switch at some point in the next couple of years. How does robotics start to impact some of these different companies, especially the ones that we don't necessarily think of as pure hardware manufacturers? They may be outsourcing, the Apples of the world, et cetera. But if all of a sudden we're not using human labor and we start to use humanoids or other types of robotics, I mean, is it the same story? Just more profits, less employees?
Yeah, but the less employees, like, we're going to be going through a massive innovation renaissance in this country that we haven't seen maybe going back to like post-World War II. For someone like myself who's traveled, 3.5 million air miles the last 25 years, like, and being all around this country, there's so many places throughout this country that like had 75,000 people living there. Now it's 15,000. The factory went to, abroad. They have education issues, others. Now innovation centers come back to the US because of where this is rooted, from semis to hyperscalers to everything else. So I'm not saying robotics doesn't take jobs on the edges, but I would argue the innovation that's going to happen is going to much more outpace. You're going to have many more jobs created than taken away. But also it goes back to when I covered tech late night, everyone's like Silicon Valley, it's done. Like there's no jobs. Like this is going to be the end. Yet it created the biggest asset probably in the United States today. When you think where it is. So it just, look, I believe we are in the beginning of something that's even hard to wrap your arms around. Data centers are going to be half the size of Central Park, where everything's ultimately heading. And to be negative on tech after CES, Davos, earnings, CapEx, I don't get. If you want to focus on three dudes trading CDS spreads for Oracle and become obsessed with it in their basement, that's cool. Like, I get it. But to me, like, I'm much more focused on like fundamentally what's happening and how it's going to play out.
Do you have views on where Bitcoin goes over the next 2 or 3 years?
Look, my overall view is like it's an asset class. And you can't be bullish on tech and disruptive tech and where everything's heading and not be bullish on Bitcoin. Now, it's my view that like it's going to create from it the use cases that we don't even see today in terms of ultimately companies that are going to be created, especially on the blockchain side. So that's why it's like if you're bearish on tech and bearish on crypto in this environment, then it goes back to, like I've said, like you're the one at the party, like you'll watch it from the outside, you'll go up to your room and read a book, and the bulls and the bears, when they meet up, next morning, bulls had a lot better night than the bears. And it just goes back to like bears sound smart, but the bulls make money. And when we go through periods like this on the software and tech dislocated sell-off, it actually makes me more bullish because it's so dislocated relative to the fundamentals and relative to the spending and the CapEx and where it's heading.
As a public market analyst, do you pay attention to the private companies, the model companies, and kind of everything that's happening on the private side?
Of course, because to some extent, private companies give you so much good data points. You want to understand where the bids are, right, relative to private markets and public. And also, I think you get a lot more clarity on the private markets, not necessarily just from what's happening from a fundraising perspective, but I think what's happening in terms of real examples. Like if you talk to software companies today on the private side, that gives you much more real data points that helps you, I think, when you're looking at what's happening, extrapolate on the public side. And look, in terms of like IPOs and what we see with so many of the most successful companies in the world right now, private and potentially going public, it's an exciting time. But look, like the haters hate. It's the nature of it, right? Like, you know how many people I know, investors, where they didn't own Amazon, Tesla, NVIDIA because they're focused on earnings over the next 1-2 years. The transformational tech stocks you need to be look out in the next 3 to 5 years. If you focus just on that, you've missed every transformational tech stock the last 20 years.
Are there any specific companies that you think are undercovered or you're very bullish on, but you think people hate unnecessarily?
I just think right now, software is a generational opportunity in terms of the sell-off. From Salesforce to what I view with Microsoft, Oracle. I think what's happened in cybersecurity, CrowdStrike, Palo Alto, it's something where it's head scratching and it's a dislocated from fundamentals, and where if you think that Claude or Anthropic or different tools are going to unseat Palo Alto or CrowdStrike or Zscaler, like I'll take that bet. Like I'll take the opposite side.
Would you fight someone in a Dunkin' Donuts for it?
It's possible. Again, I mean, look, I wasn't expecting Pomp to be like the Carson, Jimmy Kimmel, but again, maybe look. I think actually you like this could actually be like maybe like a bullish sign in terms of maybe we hit a low here.
Yeah, I definitely think that we're at somewhere near a low, right?
I like it.
Yeah. I mean, look, I do think that you are an eternal optimist, but you're very rooted in data. And when you look at the data, it's pretty compelling.
But it's rooted in data. It keeps coming down to like, that's why I travel. So that's why we live and breathe and eat it. And I get like the optimist and like being viewed as permeable and whatever. But the reality is it's based on data. Like it's based on like the work that I do. And I always say like the bears, when they're in hibernation mode, they can't see AI in the spreadsheets. And it's the reality, right? But it's what makes a market, and that creates just more opportunities to own the winners.
Maybe if you say it's the bottom, then like so many people listen to you, then it will be the bottom.
And look, but it creates the opportunity. Like it speaks to when you go through environments like this and you go through the dislocation, I think it just speaks more and more to just the emotional bull-bear debate in terms of AI revolution. But talk to any company in the world, 60 to 70% of IT budgets right now are influenced by AI. And I'd say 98% of those companies are basically rooted in the US. Supply chain, obviously, in Asia, and we're bullish on names like Alibaba and others, but it's an exciting time to be an investor in US tech stocks.
I agree. Before I let you go, you're very fashionable. You have your own fashion line. Where can people go and find that?
Yeah, so if you want danivesclothing.com, you could do that. And again, this is a Sports Shack. This is our Sports Shack. And look, my whole goal is like, look, it's having fun with it, right? I think too many people in this role, they take themselves way too seriously. So just have some fun and fashion and, enjoy it. And look, I think Pomp next year could be wearing maybe a pink Sports Shack. I could potentially say it. So you never know. Maybe Bitcoin's
be pretty low.
Maybe if Bitcoin's 150, you're wearing a pink sports jacket.
Probably if it's 10K, it's more like it. All right, Dan Ives, everyone. All right, next up, we've got Yoni from eToro. What's up, man? All right, let's go. You ready?
Ready.
So you've been in the Bitcoin industry from 2011?
2010.
2010, okay. So you may be the person in this room that's been here the longest. Are you nervous?
Not at all.
Okay, why not?
It does feel, first of all, like the 4-year cycle on the clock. According to the 4-year cycle, Bitcoin is at $1 million at, if I remember correctly, 2029. This is, I remember, first cycle we launched just before Mt. Gox collapsed. It went from $1,200 to $150. Everybody was nervous, saying Bitcoin would die. Then 2017, bless you.
Thank you.
Then 2017 happened, again another crash. Then 2022. So it's like on the clock, right? 2014, 2018, 2022, 2026. You get the correction. Everybody panics. There's capitulation. And that's the opportunity when you buy.
Do you feel like 100K was a psychological milestone where you could say, we won?
I think it's more than that. I think the adoption and sort of mind share of Bitcoin, of crypto, of blockchain is we won. There's no question about it. Now, in eToro, we started in securities, so you can actually buy stocks from 24 different exchanges. Right now, a lot of people are trading gold and silver and commodities. So we see that swing between crypto to stocks to commodities for basically since 2014, more from 2017-18. So I think we won because what we're seeing now is capital markets actually copying crypto markets. So markets are moving 24/5. They're moving now 24/7, and the reason that they're moving 24/7 is because younger audiences are just used to the markets simply open 24/7. So they go to their broker and bank and suddenly something doesn't trade on a Saturday or on a Sunday, and they think it's broken, right? So they go back to their meme coins. And when chair of the SEC, Paul Atkins, says that he wants to see capital markets on chain, that's where we won. Everything is moving on chain.
When you think of your business, you have a European business, you've got a US business. I think before I ever invested in eToro, you and I had a conversation. You were like, there's certain products we can offer in Europe, there's certain products we can't offer in the United States. I think you looked at that both as a challenge and an opportunity. The US is rapidly trying to catch up in a lot of this stuff. What's the current state of the difference between the European market and the US market?
Well, first of all, we're also regulated in the UK, Singapore, Abu Dhabi, Australia. So we have this perspective of seeing regulatory environment changing across the world over time, both accepting crypto and innovation. And I would say this is by far the most friendliest administration we've ever seen here now in the US. I think there's a big difference between regulatory environments in different places. In Europe, everything is regulated. So crypto was regulated, very wide MiCA adoption. And now basically it's a regulated environment. But when you think of things happening right now in the US, like prediction markets and perpetual futures that are happening on chain, so I can actually open right now my MetaMask and trade a leveraged trade on Tesla, right? Or prediction markets, which are very, very popular. These are still very much sort of green territories, becoming more and more popular here in the US. So I would say right now, in some cases, the US is actually leading. It was lagging under the former administration. In many cases, now it's actually leading and bringing new products to the markets.
You were one of the key drivers of colored coins. Most people here probably don't know what colored coins are. Explain that, and then how that relates to what we're now seeing with tokenization.
So in 2012, I wrote a paper called Colored Coins, which was we can actually use Bitcoin to issue euros and dollars and gold. And I went and actually presented it in the first Bitcoin conference in San Jose and in one of the big banking conferences. And I posted it on Bitcoin Talk, which was the whole town of where crypto people stayed. And Vitalik Buterin, the founder of Ethereum, saw it and told me, hey, this super interesting tokenization, came to Israel, actually worked on the paper, absolutely brilliant Einstein-level person. He basically wrote the paper, we ran the software, and then basically he said, we can't do this on Bitcoin. It's too slow and it's not meant for tokenization and we need to change the protocol. Let's build another blockchain. And the people in the Brook basically said, that's blasphemy. He sort of got kicked out for suggesting building another blockchain. So that's like a pretty woman big mistake. But that's the history.
Well, when he got excommunicated from the Bitcoin world, he went and
people were arguing about the protocol, then the protocol sort of forked to 5 different protocols. I have funny emails with the Tether guys because they actually thought of putting Tether on colored coins. And back then, by the way, I was still CEO and founder of eToro, and the VCs basically told me, back off crypto, it's bad for business. We're gonna get hurt in our core business of trading securities if we're gonna deal with crypto.
He goes and he starts Ethereum. Did you give him some money?
Well, I actually gave him money to write the Colored Coins paper, and then he actually sent us the white paper. I sent it to my team, and I said to the team, listen, he left our project. I won't invest in a competing project. Big mistake. But a lot of team members in eToro actually invested in the white paper. But then we listed Ethereum on eToro, and it was $4. And then I bought, and I have some of these nostalgic trades on my eToro account.
It's pretty good.
Yeah.
Another thing you guys have pioneered is this idea of copy trading. Talk a little bit as to empowering individual investors to kind of direct their own money, but also giving them opportunities to say, hey, you're a good investor. Maybe I want to do what you're doing.
So I've always been, a big believer in retail investors. I started investing when I was 13, and we built eToro in 2007, so 18 years ago. It took us 18 years to go public. The concept was, how do we democratize finance? How do we help basically open the markets for everyone to trade and invest in a simple and transparent way? And when we launched, this was the early days of Facebook and Twitter. We enabled people to talk to one another. Then we enabled people to actually share their performance with one another. And later on, we launched the concept. So when you see actually a good trader, you can say, I'm going to copy him with $1,000, and copies his entire portfolio to $1,000. And every time he trades, it trades in your account at the same time, the same price, in the same proportion. And that part has really grown over the years. Our top investor now has $300 million copying him, makes more than $1 million a year from us. for having $300 million copying him. The second one has about $200 million copying. The second one has been with us for about 12 years with 29% average returns over these 12 years. So this is Buffett level returns for a retail investor who's originally from Denmark, now in Dubai, but basically built his business, right? His lifestyle. He's traveling 200 days a year across the globe from just being a retail investor in eToro. So we're big believers that investors and traders can make money in the markets, whether it's crypto markets or capital markets, but you need to have the time to really invest your time, attention, expertise. You need to have your 10,000 hours in the game to really be good as a trader and investor. And if you're there just as a bystander, you can copy just the smartest investor in the world on eToro.
You're a U.S. public company now. What's that like?
Well, it really depends on the markets. I was much happier Q4 before the correction, both in crypto and capital markets. But, we've been building the business for 18 years. My father was also a CEO founder of a publicly listed company, so he taught me very early on every quarter to send our financials to all of my investors, so that's very, very similar. I've learned throughout the IPO that hedge funds in Wall Street are actually very, very similar to crypto traders. They're just looking for opportunities to come in and out from. So, it's a very exciting milestone to be a public company, to have our customers on eToro, with their $20 billion being able to now also be shareholders and stakeholders in eToro by being able to buy eToro shares. And I think, just like crypto have their cycles, capital markets have their cycles as well. And it's eventually about building the business, but for us, building great products for our customers, continuing to build and build and build. And I think now AI is just driving our ability to build more products in an insane way. I mean, we went from 2x delivery to what seems to be now somewhere between 10 to 100 times more power with the same team to deliver products to our customers across the globe. So I have no doubt that being able to deliver products to all of our customers across the globe, seeing the largest transformation of wealth in history with $120 trillion at least moving to younger generations is a huge opportunity in capital markets.
What are the latest public numbers that you shared?
Well, I'm here for earnings next week, so I can't share anything that's not publicly. And last quarter was September. But roughly 12-month ending September is about $930+ million top line and 320 roughly million bottom line. That's 12 months September to September of roughly 4 million brokerage accounts and $20 billion.
It's pretty good.
Pretty good. On the path to $1 trillion of our customers.
Hey, I like to hear that. Last thing is with the tokenization stuff, obviously we have seen a lot of movement in the US of people saying, hey, we want to add this to brokerage accounts or brokerage platforms. Any plans you guys have discussed there?
Sure. So we announced our tokenization of stocks already. We are partnering with a lot of what's called RWA, real world assets tokenizers. And again, I think we're seeing two inevitable truths. One is on the consumer side, younger generation getting $120 trillion over the next roughly 20 years. And on the back end, everything being tokenized. So we're already seeing real estate projects. We're seeing private equity with issuers like Apollo, Blackstone, BlackRock, Franklin Templeton, all coming on chain. So when you have customers that want to trade tokenized assets, and when you have issuers, the largest real estate, private equity companies in the world, knowing that those customers are there already with trillions, I think it's inevitable for tokenization to get to $100 trillion and beyond that. And that's before thinking, and that's $100 trillion of assets that are not right now U.S. capital markets. Now add to that another $100 trillion of U.S. capital markets from bonds and stocks going on chain, with basically the SEC, the Fed, and CFTC already saying that the DTC is going to move on chain, right, and move 24/7. So once you have these two sort of intersect, there's no question about the fact that it's happening. It's just a matter of sort of who wins the race, which blockchain, which is the first asset that's going to be super interesting. And surprisingly, like Elon sometimes say, the most entertainment outcome is the most probable one.
Well, I think you guys are doing a great job. The business has gotten huge now. Earnings are coming out, what, this week or next week?
Next week.
Next week. So you're here in the U.S. until you do earnings.
Yes.
Amazing. Yoni Yassia, everybody.
Thank you very much.
All right. Last but not least, Mr. Anthony Scaramucci is going to come out here. Maybe. Yeah, I mean, who knows? The guy may be taking a nap back there. Oh, there he is. All right, here we go. Come on, let's go. You got to listen. I told him 100 times to make it lower. I don't know what you want me to do. If you can't handle the heat, get out the kitchen. Oh my God! Here we go. All right, so listen. I got important questions to start with. You got the microphone? All right. You one time told me like a long lost father that Greeks,
my agent
that Greeks
told me I was
and,
going to sit higher in the chair though too. I mean,
that Greeks and Italians are got a couple differences. What did you tell me?
how many Greeks are in the room though? Let's just show her.
No. Come on. How many Greeks? If you're a Greek, raise your hand.
Tell the joke. I could tell you the joke. Do you know the difference between the Greeks and the Italians? The Greeks invented sex, but the Italians, we introduced it to the women. See, if there were more fucking Greeks here, I wouldn't have said the joke, but there's only like 5 hands. All right, go ahead. What do you want to talk about, Bob?
All right,
I know
so
that
you're famous because you're like, in WWE, you're like the evil villain who goes against the other side. You were in the White House for 11 days.
Okay.
Probably the greatest thing that ever happened.
That makes
to you.
me the evil villain.
Hold on.
By the way, the Dow did drop below 50,000 in case you guys weren't watching.
Here we go.
Right, go ahead.
What has Trump done well for the economy? What has he done poorly for the economy in your eyes?
All right, well, first of all, I was at Consensus 18 hours ago, flew straight home to be here for Anthony Pompliano. So let's give it up for Anthony Pompliano. It's an amazing event you put together. And you deserve all the credit in the world for all the things that you do for the community. So the objective answer on Trump, and I was at an event last night actually in Hong Kong with a couple of the senior governmental officials there. Richard was there from Binance. It was a good group. Asked the same question, very objective. There's good things about Donald Trump, but if you're being objective, there's bad things about Donald Trump. Now, he's a Gemini. Pompliano's a Gemini, right? So let me tell you about the Geminis. They get two people inside of one body, right? The good news for Pomp, there's two good people inside Pomp, right? But Trump, there's like one angel and one devil, right? And so he's got very good instincts. He's definitely better than Kamala Harris for this group of people and for crypto. His detractors will say, well, crypto went up and now it's back down. I think that's frankly more cyclical to the market environment. It's less about him. And I think the regulatory stuff that he's done for this industry is game-changing for the industry. So he's a net positive, significant positive, not net, like meaning significant positive. But here's the problem with him, and I told you this last year, and I'm probably going to repeat myself, is that you've got to eat everything. You can't just pick he's pro-crypto, I like that. He's a tax cutter, I like that. He's good for financial services regulation. He's pro-growth. I mean, we could debate the tariffs, but I think you have generally been more right about the tariffs. I've been generally more wrong. I thought the tariffs would have done more damage to the economy, but it turns out that the companies, 80% of them, they ate the tariffs. So I give you credit for that. But hear me out for a second. When you're telling the international community that you're going to invade Greenland, and you are putting troops in Vermont and training for a Greenland invasion, and those troops are hiring lawyers because they're like, okay, we're going to be going up against a NATO country, which is actually a violation of a congressionally sanctioned treaty, and they're now talking to lawyers. So if the president tells me to go attack Greenland and we're allies with Greenland, what do I do? I don't think we should be doing that. That's just me. I don't think we should be doing that. And it does blow back into the industry because you guys say, well, how is that related to Bitcoin and the Clarity Act? Let me tell you how it's related. His adversaries look at that and say, okay, I'm not going to give Trump a win. Okay, look at what he's doing in Greenland, or look at how he's doing this, and so I'm going to vote against or stall the Clarity Act. Now, I don't know your opinion about the Trump coin, the Melania coin, but I said last year that stuff hurts us, doesn't help us, because I think he took $700 million out of that, according to the Wall Street Journal. And I think people look at that and say, okay, probably shouldn't be doing that as the President of the United States. And so guess what they did? They put all these bells and whistles in the Clarity Act to prevent that, right? And that slowed down the act.
Do you think it'll get passed?
I do. I think it'll get passed, and I think it'll get passed in a version of it that the people in this room will not love. You'll look at it and say, okay, the banks won on that, these people won on this other thing. It's not going to be a libertarian ideal of a bill. But I have said to Brian Armstrong, and I've said to other people, I was with Brian in Davos, the enemy of progress is perfection. And since he brought it up, I have an 11-day PhD in Washington scumbaggery, so I can tell you how these guys operate, okay? You got to get something done. Because if you get something done, then you'll get no action letters, and then you'll get amendments. And let me give you a perfect example of this. Gary Gensler, who I think, and I was here 2 years ago, and I said he was the worst SEC chairman ever. He blocked the Bitcoin Cash ETF, lost the lawsuit, and then he did something that he had the power to do. He made it impossible to put your Bitcoin into the ETF. And then if you were going to take profits, you had to take cash out of it. You couldn't get your Bitcoin out of it and have a non-taxable event. That was absolutely ridiculous, but he did that despite the industry because he was anti this industry. But let me say something. We got the ETF done. And so what did Paul Atkins do? He went back in there and he put the amendments on it to allow for that. We now have a staking Solana ETF, a staking Ethereum ETF. You've got to start with Washington and just get something done. And so my last point on this, because I've talked to several Democrats in the House and our two senators, Schumer and Gillibrand, they want the deal done. They do not want to go up against Fair Shake and the corporate crypto businesses, publicly traded, who are going to spend a ton of money shooting at them in the midterms. So I do think it gets done. And it probably gets done even before, McHenry said Memorial Day. I actually think it gets done before that.
These politicians are really scared of that Fair Shake PAC, huh?
Yeah, Fair Shake did an absolute number. If you're really looking at the empirical data, the House, the Senate, and the presidency went to the Republicans. And these are incremental things, guys. The country's still very, very split. Whatever you think of Trump, if you like Trump in the room or you dislike Trump in the room, it's roughly 50-50. And so a little bit of money in a few key races really hurt the Democrats. So people in this room may remember Sherrod Brown. He hated crypto. It was like the unholy trinity of Gensler and Elizabeth Warren and Sherrod Brown. He was the head of the Senate Banking Committee. He blocked every piece of legislation. And he was a disaster for this industry. Fair Shake, corporate crypto, spent $42 million on that race in Ohio and blew him out. And let me tell you something, guys. He was an 18-year veteran of the Senate, a three-term senator. He or she has a 97% reelection rate as an incumbent. And so, yeah, you send $40 million into a race like that. You overwhelm him with the marketing, overwhelm him with the grassroots. He didn't even see it coming. And so those guys are looking around saying, I don't want Fair Shake shaking me out of the Congress.
The BlackRock ETF, I think a lot of people don't know that there was a point in time where there was almost no BlackRock fund that became the ETF. You will not brag about it, but I'll brag for you. You pretty much helped save the fund, or you were a big supporter early on?
You're very generous to bring it up, but we get a lot of credit for it. But I don't think that. I think somebody would have stepped in there. Robbie, who you guys heard from, I guess maybe 3 or 4 sessions ago, Robbie Mitchnick came to me and my partner Brett Messing, and this was in the bowels of the post-FTX debacle. It was probably December of 22, and said that he was getting pressure. They had formed a Bitcoin trust at BlackRock, and that he wanted to file for an ETF. And the committee, the ETF committee, said to him, well, you don't have any outside money in this thing. You only have BlackRock money. And if you can't get any outside money, and this is at the depths. I mean, I think, Pomp, tell me where Bitcoin was like December of 22, like
16K,
16, 17,000. So he came to see us. He said, look, I got to get outside money. So we put $10 million in it. And that started the ball rolling towards the ETF. And they ended up doing it. My partner, Brett Messing, was with them in January of 24, ringing the bell at the NASDAQ. So that worked out. And we still own it. We bought more of it. And I think they've done it enormous. And by the way, think about that ETF. It peaked at over $100 billion. You have to think about it as the fastest growing ETF in the history of ETFs. You have to think, where is it now? Probably 65 billion, maybe, something like that with the correction, but still. And look at the numbers. The boomers own the ETF, and the boomers are hodling the ETF, which is an encouraging sign for the industry.
Skybridge has reinvented and evolved itself into a really interesting place where I think that you serve with one foot in the traditional world, but you also really have deep conviction in Bitcoin and crypto. Talk about the business today and how you think about what you guys do.
So, I mean, listen, we had a typewriter business, if I'm being brutally honest. You have to look at your businesses. You know, I think one of the people that I always admired was Steve Jobs, and I only met him one time, and this is going back 2005. He was very sick. He was at the Sun Valley Conference making a presentation, and he said something there that I think about all the time. He said, do you know who shot the iPod? And he answered the question himself. He said, I did. I shot the iPod. The iPod was the best-selling product in Apple's history up until that moment. But he knew that that was going to fit inside of a smartphone. And he knew that by shooting it, he was advancing his company. So there was a group of people sitting around and saying, no, don't do that. There's a tremendous amount of revenues in the iPod. And he said, no, I'm going to shoot the iPod. I'm going to put it in the iPhone. And it's going to eventually increase the sales of the iPhone. And I think we did that with our business. Looked around. Anthony came to see me when I left the White House. We did a podcast together. And I think you remember the podcast. I was doing a lot of work on Bitcoin. And maybe 6 months after that podcast, we started buying Bitcoin. And I went to my customers and said, we're going in this direction because this is the future. And a lot of people wouldn't do that. And I'm going to tell you who's not doing that right now. That's the banks. So the banks, I'm going to give this analogy to you guys. The banks are the cab companies. And Brian Armstrong and Coinbase and Tether, they're Uber. Okay, they're coming in, they're going to eat their lunch. And they've got a choice. They can adopt and they can improve their functionality and increase their competitive advantages and use the marketing they have to move their business to shoot their iPod. Or they can go to their lobbyists in Washington and say, do everything you can to stall this technology and don't let stablecoin holders have yield on their stuff because we have a lot of money and you guys in Washington are influenced by money. And so we're going to take the lazy way out and not compete with these guys. And so for me, these are very hard things to do. Okay, I got lit up. I got torched by 2 wirehouses. I think then Bitcoin went down. I think there was like 2 financial obituaries written about me. The New York Post had me like Tyrion Lannister, right? You're not allowed to say midget anymore, but that's literally what I looked like. I was like sinking in a Bitcoin boat, and they had me dying.
Front cover.
And you've been in my office. The clowns in my office like made a big poster of this stupid thing. I have to look at it every day. And
it's only funny because he came back.
Yeah, but no, they trust me. They were making it at 17,000. They put the big poster up. But I'm bringing it up for a reason because you have to make the tough decisions and you have to look to the future. You can't sit in your business. One more, I know we're going to run out of time, but one more quick story. Jerry Yang, who the older people in this room will probably remember, he's the founder of Yahoo. So he was 22 years old and he was cold calling Pacific Bell, which doesn't exist anymore yet. And he finally got a meeting with 2 VPs of Pacific Bell, and he drove his like Volkswagen Rabbit to their offices in San Francisco. He said, I have this really cool thing. I created this search engine. I'm a young kid. I called it Yahoo. let me show you how it works. And you type in the name, you type in Anthony Pompliano, it'll spit out the person's number, pizzeria or something. And I want to sell this thing to you guys. And they looked at him and said, look, we don't want that thing. What we do is we chop down 4 million trees, and we make paper, and we dye that paper yellow, and we take a 3.5-pound book, and we drop it off at the house of every one of our customers. And we've been doing that for 95 years, and we get a lot of revenue out of that, and we got a lot of advertising in those books. And so get the hell out of our office, okay? And a lot of people do that, and you don't want to be that. And so we took the hit at Skybridge. We've been rewarded from taking the hit. It's a more profitable company now, and I think it's a company set up for the future, but you got to be willing to take the hit.
But what I think is also interesting is you not only have products and funds, but you also put crypto on your balance sheet as well. And so you're kind of living the exact thing that you're talking to people about as you build your company.
Yeah, so Anthony and I meet every December.
That's not what I was
And I have Anthony look at the balance sheet. He tells me where the balance sheet's going to go, and we obviously stake things like Solana, and we get some yield on our Bitcoin from places like Coinbase and Galaxy. But Anthony did say something to me about Solana, which I thought was interesting. You're worried about Solana. Remember this conversation in December? Because, the staking does create some inflation. I think you're still long-term bullish on Solana, or no? Yeah, so I think that's going to be, there's going to be a churn going on for some of these things now. But I'm a long-term holder of Solana. I'll stay in the position. I was with Lily from the foundation in Hong Kong yesterday. I think they're working on some interesting things. But that's the other thing. When you're wrong or you change your mind, you got to have conviction that way too. But
I think that
we do both.
It's interesting for you to go.
I think I'm worried about the demography. Chuck Grassley, people probably know who he is. He's the senator from Iowa. I think he's like 700 years old. Maybe he's 800 years old. I think George Washington's great-grandfather. He's been in the Congress for, I don't know, since the origin of the country. He'll be in the Congress. I mean, we're going to leave the country to like Keith Richards and Willie Nelson and Chuck Grassley, right? And I'm worried about that because there's a group of people older than us, okay? And even, I'm older than you, Anthony, but I'm talking about people in their 70s that are still running money, and they're maybe taking their supplements or their stem cells, whatever the hell they are. They're going to be living forever, and they like gold and they like silver, and they hate this industry. Now, you're here in the room, and you like the industry, and you're probably like, why the hell do they not like this industry? This industry is the future, but this is how people think. And so if you said to me at the beginning of the year that we were going to have fear of currency debasement, we were going to have the big, beautiful spending bill, layer on additional, nothing's going to stop this train, Lynn Alden type deficit spending and money printing. And you said to me that we were going to have this sort of tension in the global geopolitical environment. And you said gold was going to be up and silver was going to be up, but Bitcoin's going to be down. I would have bet that all day long. And of course I did bet that, and reflected by my balance sheet performance and our hedge fund performance. And so why did that happen? There's some reasons. Maybe there's a big whale that decided to sell. Maybe somebody got hit and margined out on October 10th. But the real reason is that the richest people are the oldest people, and they don't like the industry. And so we need that 35-year-old capital allocator to be 45 and then 55, and you're going to see this thing really pop. But I think it's going to take a while because of that. That's probably my biggest worry about the industry.
Will you tell us about your politics podcast? This is a monster that you've built.
So, I mean, that is sort of a fluky thing. I do a podcast with a British woman by the name of Katty Kay. She's on Morning Joe, if you guys watch that show. And she's a very polished 30-year veteran of the BBC. And so we have a 3 times a week, 30-minute podcast called The Rest is Politics US, which is it's the #1 political podcast in the UAE, Australia. It's #3 in the UK, so it's very popular overseas. And it's probably the 29th now on Apple and Spotify here.
It's the top 30 podcast in the entire country?
Top 30 in the category of politics.
Oh, okay.
It's top 60 in the category of news. It's probably 150 overall. But I mean, there's 160,000 podcasts in the U.S., so it's a well-performing podcast, and it's fun to do. And listen, I don't like Trump. I think I've been very clear about that. But when he does something right, I also call it for what it is. I said the bombing of Iran, there wouldn't be a lot of flack coming back, and I think it would actually be a positive message in the Middle East. It turned out to be. I'm positive on his direction on crypto. He has a point about Greenland, ladies and gentlemen. I'm not saying he doesn't. My friend Brad Thor, who is a novelist, he's just published a book called Arctic Hour. If you read the book, it's a fiction, but he really writes from a national security perspective why we need to have a great national security position in Greenland. But there's ways to go about it. It's the approach, Ant. That's all.
You think he's going to build a Trump Tower in Greenland?
No,
remember the famous
I think he's going to build
tweet?
a Trump. I think he's going to build a Trump Tower in Gaza.
I knew you were going to say that. That was like a softball. They just let him hit it, right?
You like him, man. What can I tell you? You'll learn like everyone learns. Everything ends in tears with this guy. You'll see. It's just a matter of time.
I like them all, and I hate them all.
What else you want to talk about here?
Are you going to get any tattoos?
Are you a little Trumpian here? Can I tell you how he's a little Trumpian? Okay. You see how high his chair is relative?
Do you see?
Well, I'm just telling you. When you go to meet Trump, you're on the 26th floor. This is before he was president. Okay. Trump's desk is up here, and your chair is down here. Let me get on the floor here and talk.
No, come on.
Go ahead, Al. One more question before we leave. Go ahead. I mean, it's a good position.
It's very
Trumpian.
Where do you want people to go? Where do you want to send? Should we do a little book? Wait. You guys want to actually know something? This is a fun fact about Anthony.
I want him to go to you.
Eight books? 7?
7.
7 books. The last 2, one was about Bitcoin, one was about Solana.
Yep. I just finished the book on. Anybody wants to be kind to me, you'll help me with my sales. I just finished a book called All the Wrong Moves. It's not about Trump. It's really about the political system, the decisions that we made after the Berlin Wall came down, where we were running things quite well for the first 10 years, ran a budget surplus at the end of 99 and 2000, and then how we started making some really bad decisions geopolitically and economically in terms of offshoring, the World Trade Organization decisions, and some things that have led to this anger-based situation in our political system. And it's not a political book as much as it is an economic analysis of how we ended up where we are. And it's called All the Wrong Moves, and it's being published by Holt in the U.S. and Penguin Random House. It's coming out in September.
Anthony Scaramucci, everybody.
Guys, thank you. Thank you, guys.
It's hot here because Scaramucci's here, It's like It's Thursday. You got to go to work tomorrow. It's not the weekend yet. All right. Before I let you guys go, there's 2 things that you guys should be aware of. One, Arch Public did not give away the alcohol yet. So they've got this bottle. I think they already told everybody about it. But it's like, I don't know, it's like a $10,000, $15,000 bottle of alcohol. They're really excited. I don't drink, so I don't know if it's good or not, but they say it is. So if you go outside when you leave here and go to the left, they're kind of all the way in the back. I think there's some way to enter. If there's not, don't blame me. That's just what I got told. And then the second thing is, there's Thomas right there. Thomas, raise your hand. So Thomas is here. I don't know if Megan is here too. Megan's there. All right. So Thomas and Megan are 2 of the owners of PubKey. PubKey is the only Bitcoin bar, I think maybe in the world, but definitely in New York City. They just opened another PubKey in Washington, D.C. I think, is the plan for the 3rd city public? No. So they said they're going to put a PubKey in every city except for Boston. But the after party tonight will be at PubKey. So if you get lost, if you get bored, or you get drunk, open your phone. You can get on Uber, Lyft, you can get in a taxi, or you can just yell loud in New York City and say, "Take me to PubKey," and somebody will help you get there. And we'll have a party there as well. But it's a fun time if you've never been. And that's it. I appreciate everyone coming, and we'll see you guys next year.